to high levels of.
Well, I'm saying that because that's the term.
I know.
Yeah.
I know.
Get rid of
That's
her.
the term that they use for shrink, but we know shrink obviously encompasses all forms of inventory loss. They did not come out and say theft. They said shrink, so that's why I'm using their
Yeah,
word.
you're
because-
using their words. It's just weird.
Except for their dumb word, choiceful.
Yeah.
Choosy, discerning.
I know.
There are other words that are out there.
There are so many, and it
Why make
popped
up
up
a
on so
dumb
many other
MBA?
executives that consumers are being choiceful.
Resistance to break today will be 515.11. Today's resistance.
Dave.
Welcome back to Squawk Box. Bernstein initiating a crypto rating this week with a bullish call for the sector. Analysts at the firm expecting the total crypto market cap to reach $7.5 trillion by 2025. Joining us right now is Crypto.com CEO Chris Messerlet. Good morning to you. Let's start here. If $7.5 trillion, what is the current market cap of crypto right now? Bitcoin is what, about 1.5?
About that, yes. So we are looking at roughly 3xing the entire market, according to the analyst, over a period of, say, 18 months.
And we've been talking this morning, and really all week, or maybe in the last several weeks. Obviously, Bitcoin's been on this remarkable run, as has Ethereum and so many of the other currencies. We can discuss whether they should be described as currencies or what they should be described as. But when you see this type of move, how much of this is literally just a supply-demand issue that's being created by the halving of Bitcoin, but maybe more importantly, the ETF market, and how much of it is something else, meaning it has to do with what you think the Fed is going to do, or what the economy is doing, or what the NASDAQ is doing?
I think the move is predominantly driven by the inflows from the Bitcoin ETFs. This is a very successful product, and there is a problem with supply side, so it has to be reflected in the price.
What do you make of this move down, though, even in the past couple of days? What is that suggestive of?
I think it's a healthy move, removing some of the leverage that is built up in the system. And what we want to avoid is sudden, super aggressive spikes. We would really like to see steady inflows into the industry, into Bitcoin and other coins that will allow us to have about 12 to 18 months.
Can you
run.
figure out, though, Chris, what's happening? Literally in the past 24 hours, we've gone from, call it $73,000 to $67,000.
Five.
Was that a function of the retail market selling actual Bitcoins, or was that institutions selling the ETF product? What do you see, given the flows that you see, actually happening behind the scenes?
Right, so we sit on a ton of proprietary data, so we can look back at what happened in 2021 cycle from retail perspective and compare it to what's happening now. Looking at the data and the intent as the signal from retail side, we are probably in December 2020, January 2021. We're seeing this kind of metrics, right? So I think this is predominantly driven by what's happening in the options market and a correction. But you have to remember that this level of volatility is actually pretty low comparing to what we've seen in previous cycles. So
That's what I want to ask you, Chris. Is that over? I mean, 20,000 to 3, 65,000 down to 17. Now there's ETFs. There's more mass adoption. There's more institutional, if you will, ownership. Are those days over? Or can we still expect 80% high to low moves
No.
for Bitcoin in the future?
I think you would see a steady ramp up, and that's what we want. And I think as the signs of the market and the increasing liquidity happen, you will see less of sudden moves.
Less of that.
This is an asset that you want to hold for decades, not for days or weeks.
Okay.
Chris, it's a longer conversation, and I hope we get to continue it with you. We appreciate you joining us this morning. Thank you.
Thanks for having me.
Coming up, we're going to read the charts with Katie Stockton. I wonder what the resistance is on resistance and support. That's what we're really talking about for Bitcoin. Plus, ticking off TikTok creators, the House passing a bill that could lead to a potential ban of the social media giant. We have reaction from the head of a creator family, Mark D'Amelio, co-founder of D'Amelio Brands. Squawk Box coming right back.
The Dow snapping a 3-day winning streak this morning. Futures are pointing to a bit of a bounce back. We're going to talk market technicals. Plus, hot inflation data and the Fed's rate path. We'll hear from a former Fed president on when rates may come down. And the impact of a potential ban on TikTok on content creators. The father of two of the most lucrative TikTok stars out there joins us to talk about what the potential is. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk right here on CNBC. It's a Friday morning and we are live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Becky Quick and Joe Kernan. We got a lot going on in the markets. We're going to show you that, plus a lot going on in crypto land. We're going to look at the charts in just a moment with Katie Stockton, who's going to help us out. But right now the Dow looks like it would open up about 40 points higher. NASDAQ up about 34 points higher. The S&P 500 up about, call it 11.5 points higher. Treasuries right now, the 10-year note sitting just at about 4.281, the 2-year at 4.692. And we alluded to crypto earlier, and we just had a segment on it. You're looking at Bitcoin now at $67,452, taking a little bit of a trip up from $73,000 down at one point to $65,000. So a lot of volatility in the last couple hours there.
Let's take a closer look at technicals. Katie Stockton is Fairlead Strategies founder and a CNBC contributor. I want to talk equities, definitely, and the breakdown and some of the Magnificent Seven. I want to talk bonds. I want to talk gold. But we've been talking a lot about Bitcoin. And last time you were on, I think I'm going to exaggerate, I think we said there was resistance at 30,000. If it got through that, if it got through that, you said it could go to 36. This has happened quickly to 70.
It has. I mean, it's a parabolic up.
Parabolic.
Of which, honestly, this market has a lot of those right now. But for Bitcoin, it's pending confirmation of this major breakout. The resistance, the latest resistance, which we consider to be final resistance, was just shy of 65,000. I think we may have talked about that level. Above that, there's no other resistance, right? So you get this measured move objective, which assumes the same trend will maintain itself. And that gets it to about 80,000, 81,000 over the intermediate term, which for me is around 2 to 4 months. Near term, however, just as of today, we're seeing a confirmed short-term sell signal. This is based on the DeMark indicators. It is the first one in a few weeks. So that would call for a couple of weeks of consolidation within this very steep uptrend. And I don't think anybody would be surprised by that.
I didn't hear any numbers. Below 60?
You know, we like to use the 50-day moving averages.
What? Yeah, and what's that?
Yeah, I don't know. I should have looked this morning. Forgive me.
I mean, I wouldn't be surprised for 50s, even mid-50s.
Right. I mean, if you look at the 50-day moving averages for any of these names that are in steep or parabolic uptrends, I looked at NVIDIA's this morning. It's 21% below.
Wow.
And it is really initial support on the chart. It doesn't mean you have to ride it down 20%, but rather we have some kind of stop loss discipline. We don't have any major breakdowns in the mega caps. We have consolidation underway. We have a short-term loss of momentum, but really nothing concerning.
Nothing with Apple, nothing with Tesla disturbs?
Well, okay. Apple actually does have the shape of what we would call a long-term double top formation. So if it were to break down decisively below this 170 support level, that'd be pretty major for Apple on the downside, and it would
Just Apple?
Just Apple. Apple
And
has
not
been
the NASDAQ.
the laggard, not the Nasdaq. There's nothing of that shape or form there. Tesla, of course, is its own beast. It's been downtrending. It's a downtrend channel and has a pretty fresh short-term breakdown within that context.
So you think a lot of the, we see a broadening. We see a lot of catch up to the generals in the NASDAQ, not the other.
Definitively. I mean, it has been a concentrated leadership environment of late with the S&P 500 benefiting, of course, from NVIDIA's huge move. And yet breadth or participation has been super strong, meaning that the equal weighted benchmarks, RSP as an ETF example, mid-cap benchmarks, those all have pretty major breakouts. And it's even a global up move that we've seen. So around the world, we're seeing big breakouts to even new all-time highs for some benchmarks that have lagged the S&P 500 for many, many months and even years.
What about the volatility? I mean, we've talked about how we haven't really seen much on the VIX, but it does feel like there are more volatile elements out there.
It's been making higher lows, so it's really quite subtle on the VIX. But if you look closely on a daily bar chart, the chart would project maybe 18 to 21 as sort of a range for the VIX. So elevated, we've obviously seen much worse from it, but we have been over the past couple of weeks recommending VIX products as a hedge, a short-term top-down partial hedge. So we don't want to be fully hedged in exposure because we believe this to be more of a neutral sort of consolidation within a very strong uptrend.
Have yields broken out on the 10-year?
Yields have short-term upside momentum.
To where?
And the initial resistance is around 433, just a minor level, and above that it projects about 455. That to me is a likely level for it to make a lower
When
high.
to 455 are rate cuts off the table?
I don't know. That's.
I need you to know. I need you to tell me.
I need you all to tell us, inform the viewers. So I do think that 455 is probably likely based on what we're seeing in the indicators. We have an intermediate term momentum gauge that is on the verge of its first crossover or buy signal in a way for yields for months now. So I think it is a move that could sustain itself here, maybe even a couple of months.
Is there any way you can chart inflation? Do you do that?
You can chart anything that has a number, right?
What is it?
But when
Is
you
it in
have
a
something that's
downtrend?
monthly,
Or is it stopped?
I would say it's more neutral. Neutral would be. I know it's not as exciting, but
Because that's what we really need to know, that last mile. And it's, you think, well, that's a fundamental question. Whether the Fed moves the goalpost, says, 3% is pretty good. Do you think that would ever happen? Probably not.
I don't know. I'm the wrong person to ask. You
okay.
keep trying.
I do keep trying. Okay, so how about leadership in sectors in the S&P? Anything look really bad? Anything look really good?
It's been a very offensive market, so
You're offended?
the defensive sectors have, of course, lagged. I mean, if you look at the consumer staples sector versus the S&P 500, same with utilities, very well-defined downtrends, REITs as well. And of course, to contrast that, we have technology in a very strong uptrend.
How about the Russell and small caps?
The Russell has assumed better relative strength. It's far from being strong, but we have a Russell breakout that to me has very bullish long-term implications. It's almost like I feel like this year is a year of the long-term turnarounds. That's where I think there's some excitement because then you can find them in financials and healthcare and in value stocks.
It's funny because you said that the final resistance was exceeded by Bitcoin, but then you still gave me a number for the next one.
And that's called a measured move. So it's making a 100% projection of the existing trend, essentially.
And that was
80,000, and it seems kind of conservative, doesn't it? But it's all we have.
Compared
It's
to some people that come
methodology
on,
we have.
we hear numbers like 150,000 and things like that. When some,
I wouldn't rule anything out. It's not necessarily a stopping point, but it's a natural
and we never
place.
talked about gold. Gold
Oh,
is it's the same
That's
phenomenon.
it really is. And gold, the level we had been watching was final resistance, 2063 per ounce. Major breakout. This is a multi-year range that's been resolved to the upside. So we have an objective. I think it's close to about 2280 or so, based on that same
That's
methodology.
not a real thing because it's only final for a while. Then resistance comes back depending on
Right.
what
These
happens.
are very subjective and also fluid levels. But when you derive these
Some things are much
projections-
more final, that I worry about.
Well, the
This
market
not
is dynamic, and we have to react to it at times. But at these levels, that's where you'd expect a corrective phase to unfold.
Exactly. Katie, thanks.
Of course.
Okay.
When we come up back, United Health Group outlining a timeline for restoring some services taken offline for more than 2 weeks after that cyber attack on its Change Healthcare subsidiary that was impaired payment and impairing the payment and data programs. The company's payment platform will be restored today, and we'll have a lot more on the details on that after the break. And then later, TikTok creators voicing concerns over the possibility of a ban. Meanwhile, former Treasury Secretary Steven Mnuchin telling us yesterday right here on the broadcast that he's working on buying or trying to buy the whole company. We'll bring you some reaction to all of that from somebody who's made TikTok a family business. We'll be right back.
the trial.
Welcome back, everybody. United Health says that it is aiming to bring systems back online by today after a massive healthcare hack described as the most serious on the U.S. healthcare system to date. That disruption is in its fourth week. It brought payments and other systems offline and is estimated to be costing healthcare providers as much as $1 billion a day. For more on this, we want to bring in former FDA Commissioner Dr. Scott Gottlieb. He is a board member of Illumina and Pfizer, also a CNBC contributor. And Dr. Gottlieb, I don't think we've done enough to explain this situation and describe to people what's really happening. This is kind of catastrophic. What happened?
Yeah, it's very pervasive across the entire healthcare system. This is one of the largest facilitators of health claims and medical claims in the country. They handle about 15 billion claims a year, totaling around $1.5 trillion. So basically a third of the entire healthcare system. We have a $4.5 trillion healthcare system. And what this system does is it handles claims not just for United Healthcare, but for other insurers as well. So doctors will subscribe to this system, they'll contract with it, and it will tell them whether or not patients are eligible to receive a prescription or whether they're eligible against their insurance plan to receive a certain procedure, what the cost will be, what the provider will be paid, what the copay to the patient will be. So if a patient comes into a provider right now or goes to a pharmacy and this system's down, they don't know whether or not their claim's going to get covered. The provider doesn't know whether or not they're going to get paid. The patient doesn't know what the out-of-pocket costs are going to be. So these are being adjudicated by hand in many cases. Some insurers have stepped in and said, look, if you make a good faith effort, we'll backstop the providers. United has done that, particularly on the claim side for prescription drugs. But other insurers haven't, and so you have the system right now in many cases in limbo. Some elective procedures are getting pushed off. Others just are getting done, but providers don't know when they'll get paid, and they're out of pocket for the revenue right now.
Are there surgeries that are life-threatening that aren't getting done as a result? Are there people who are going without necessary medications as a result of this?
Yeah, I haven't heard any anecdotes where things that are necessary aren't getting done. I suspect that there are elective things that are getting pushed off. I've heard stories where prescriptions are getting filled for 2 weeks at a time, so pharmacies aren't filling prescriptions for a month or 3 months at a time because they're uncertain whether or not they're going to get reimbursed, whether or not the patient's eligible to receive a medication, what the copay is going to be. So I think there's definitely some dislocation in the market right now. We're probably going to see that show up to some extent when we see quarterly earnings from some of these big provider systems. And I suspect we're going to see when United reports on April 12th their earnings, what the cost to United has been, because they've stepped in to backstop a lot of these claims. Some of them probably the patients weren't eligible for, and United's going to have to eat those costs. I know they've done quite a bit on the pharmacy side to backstop pharmacies, because a lot of these pharmacies are mom and pop pharmacies. About 20,000 pharmacies in this country, fully a third of all the dispensed medication, upwards maybe of a half, are from mom and pop pharmacies, not the big chains that don't have the ability to bridge themselves in an instance like this.
We think of this as being such a wide system, a healthcare system, but the idea that there's a point of redundancy that affects a third of all of that, was this a surprise to you?
Yeah, it was, and I think that we need to look outside the industries we've traditionally looked at, like financial services or transportation or infrastructure, where there's these single points of failure. There's other medical processing companies like Waystar that also process a lot of claims, and I think we never thought about these sort of single points of failure, these single nodes, in industries that were perceived as fragmented, so it was hard to take down. You perceive the medical industry as a fragmented industry, as lots of providers, lots of hospitals, and you never really thought about this single connected system. What happened here, this is a worm-like virus that has lateral movement within the system. So it didn't just infect this Change healthcare system inside United's central servers, but it actually branched out into all the nodes that were connected to that. So literally every health system that's connected to this Change healthcare system now needs to be checked to see whether or not this worm-like feature had lateral movement into those systems. That's why it's so hard to get this turned back on, because they need to check every node that's connected into the Change healthcare infrastructure, if you will. This is the same virus that or same group that was believed to be behind the Colonial Pipeline ransomware attack in 2021, and also the ransomware attack against MGM and Caesars in 2023. So it's a known group, a known feature, if you will, a known attack. Just hasn't affected something like this in the healthcare industry before.
I mean, if they're able to identify a weakness in the system that you, as the former head of the FDA, didn't even recognize or see, I mean, that suggests an awful high level of sophistication. Is there the idea that this could be potential nation state really targeting U.S. infrastructure?
Well, the group that's responsible for this isn't believed to be a national actor. This is a known ransomware gang. I think we need to look, I think CIS and other groups that look for the soft targets inside the U.S. economy need to now look differently through a different lens to see whether or not there's other very fragmented industry that you never thought had a single point of failure that has a soft target like this. CMS was also slow to recognize this, I believe. They didn't put out their first statement until March 5th, so we were alerted to this on February 28th. The attack happened on the 21st. We were first alerted from a statement that the American Hospital Association put out, I believe, on the 28th. CMS, the Centers for Medicare and Medicaid Services, didn't put out a statement until March 5th. So the government here looked like it was slow to act as well. I don't think early on there was a recognition of how pervasive this would be and what the impact would be across the healthcare landscape. We started to hear it, I started to hear it anecdotally from providers who were hooked into the system, the impact it was having on their offices, and you started to see things appear online from providers complaining about this. But I think that we were slow to recognize, or the government was slow to recognize what kind of impact this would have if it was protracted. And it should have been recognized that this was going to be protracted right from the outset.
I mean, you look at shares of United Health, and over the last month, they've gone from $520 to $489. That's a drop of about 6%. But what you're talking about, the potential implications, sound like they're not even going to be able to really get their arms around the liabilities at this point.
Look, I think they're getting their arms around it. I've talked to people close to this. If this had happened to any other entity, I think this would be game over. I think the fact that United Healthcare owns Change Healthcare and can bring enormous resources to bear to try to get the system back online is one of the reasons it probably will get back online. If this was still an individual company, a standalone company, remember United acquired us back in 2022 for about $13 billion. This was still a standalone company and didn't have the deep pockets of United behind it. I'm not sure that it'd be getting back online as quickly as hopefully it will. But I do know that at least on the pharmacy side, and I believe on the provider side as well to some extent, they're backstopping these claims. They're saying to pharmacies, if you're making a good faith effort to check eligibility, we're going to make sure you get paid. Some of those claims, patients won't have been eligible for those products, or they'll have had higher copays. They're not going to go and claw that back or leave the providers on the hook based on what they're telling pharmacies. They're going to just have to absorb those costs. So I suspect that there's going to be a hit to United. I'm not sure other insurers are stepping in the same way, because remember, other insurers are connected to the system as well. But admittedly, you know, this is basically United's problem. So I think that they're being more aggressive in trying to backstop some providers right now to make sure that they're going to get paid so they can continue services, even in instances where the patients, based on their insurance plans, won't have been eligible to receive the service or receive the prescription product.
Scott, thank you for explaining it to us.
Thanks a lot.
Coming up, a look at some of the movers, pre-market movers, with the futures, as you can see, all in the green, all three indices. We're coming right back.
Time now for today's Aflac trivia question. Where is the tallest waterfall in the continental United States? The answer when Squawk Box returns. CNBC. And now the answer to today's Aflac trivia question. Where is the tallest waterfall in the continental United States? The answer? Washington. Colonial Creek Falls in North Cascade National Park falls 2,568 feet.
Let's get over to Dom Chu right now with a look at this morning's pre-market movers. Good morning to you, Dom.
Hey, good morning, Andrew. So let's kick off our Friday edition of Morning Movers with a check on NVIDIA. The biggest computer chip company in the world is up just about fractionally right now on around 400,000 shares of pre-market trading volume. Looking to try to snap a two-day losing streak, the stock briefly entered what some traders refer to as corrections, or a 10% plus drop from their recent highs. You remember it hit a record level just a week ago today. A drop of that magnitude is sometimes something traders pay attention to for momentum, though if we put it in context, remember, that 10% drop is very tiny compared to that 265% move that shares have seen rally over the course of this year in the last 12 months. So it's a small blip, but it's a big options expiry day, and it's a highly traded stock, so keep an eye on any kind of volatility at NVIDIA today. Also, sticking with mega cap technology, Apple shares are up fractionally this morning on just about 100,000 shares of volume. The iPhone maker and app services giant has been an underperformer over the near term and medium term, but Apple now has purchased a Canadian-based artificial intelligence startup called Darwin AI. That's according to a Bloomberg report citing people familiar with the matter. Darwin AI specializes in technology around inspections during manufacturing processes. That acquisition comes as Apple looks to deploy more resources to bring AI products to market. So Apple shares up about 1/3%. And we'll end with a surge in shares of Madrigal Pharmaceuticals, up over 25% at this point right now, just around 35,000 shares of volume. The U.S. Food and Drug Administration approved the company's first ever treatment for a potentially deadly liver disease known as NASH, or non-alcoholic steatohepatitis, that drug giants like Eli Lilly and Novo Nordisk are also in the process of testing their weight loss drugs for as treatments for that same disease. So Andrew, Madrigal Pharmaceuticals up big, 25%. I'll send things back over to you.
Okay. Dom, thank you for that. Have a great weekend, my friend. Coming up when we return, the latest inflation data changing the Fed's outlook on rates. That's the question. We're going to have that story, and we're going to hear from former Kansas City Fed President Thomas Honig. And then later, for the D'Amelius, the TikTok, I should say, is, yes, a family business. We're going to speak to the person behind some of the biggest content creators on that platform. We're going to get reaction about a possible ban from Congress. You do not want to miss it. Squawk Box coming right back.
One of the big questions for the Fed next week, whether the last 2 months of inflation data changes the Fed's outlook and the prospects for rates coming down. Steve Leisman is connecting the dots for us right now, and he joins us with more. And Steve, we keep saying these are one-off numbers, but when you start to have number after number rack up, makes us want to take a closer look at all of it.
Yeah, it's 2 in a row, Becky. And there is risk next week in those Fed projections for their economic and rate outlooks, the so-called dot plot, after 2 months of bad inflation reports making little progress towards the Fed's goal of 2% inflation. The median official in December forecast 1.4% for GDP. We are running above it, at least so far in the first quarter. Core PCE at 2.4%. Well, guess what? Wall Street thinks that we're going to come in at just 2.8, down a tenth for the February PCE, and the Fed funds rate there at 4.6%. Now, the median 2024 projection in the middle is 4.6%, or 3 cuts. If just 2 of the 19 officials decide, hey, we should cut only twice, then the median moves to 2 cuts. So it just takes 2 to tango on this one. For the Fed, it comes down to a question of, how do you think about the past 2 months of inflation? Are they signs of a stall that they have to worry about in their progress, or are they just, as some officials said, are just noise? Bruce Willis, Mr. Bruce Willis says there are risks to the outlook with Joe Bruce Willis, that is, the economy continuing to outperform and consumers still resilient. The Fed might be far more patient on rate cuts than either its forecast implies or the market has priced in. Joe doesn't think there's a change, but as he points out, there's the risk. Futures markets began the year looking for the funds rate to end the year at 3.8. That's long gone. It's now building, it was then building in 160 basis points of cuts. Now the contract trades at 456 with just 80 basis points of rate cuts built in for this year, or right about where the Fed is at 325 basis points cut. So the question for next week, whether the Fed moves that forecast again, and markets have to price in the risk about both when the Fed cuts, we've been talking a lot about that, but also now in play, Joe, is by how much?
I think that 80 is going the way of the 150, possibly, but I change constantly. But why in God's name would we ever have just given back all this hard-won normalization just for no reason? Steve, why? Why would we have done that? 5 is not crazy. 5 is historically where things are.
It's interesting, Joe. It gets down to that debate. Maybe you'll have it with Mr. Honig about where the neutral rate is.
Yeah,
right now, at least according to the Fed's own look at the world, they're really tight. They're putting a lot of restraint on the economy. Why do you need that restraint if you're going to be at or getting towards your inflation target?
Right,
if you're not, remember the Fed said they
right, let it ride.
The Fed said they didn't need to cut. But you are right, Joe. There is a discussion going on about whether or not that neutral rate is higher, and whether the Fed is imparting less restraint on the economy than it believes.
Well, if 70 basis points can just disappear into thin air, 80 can disappear. Same way, Steve. But let's talk. And I was going to say, thank you for, I think I've called Mr. Honig a few times. But
I could be wrong. I could be wrong.
Could be?
Tom Honig.
Let's ask him.
I could be.
Yeah, I call him Honig too. He's here. Thanks, Steve. Maybe.
Well, let's ask him.
For more on the Fed's rate path, Thomas Honig. Which do you prefer, sir?
Honig gives the more correct.
Well, that's nice to know. You never said anything. You're nice. Former Kansas City Fed president and Mercatus Center. No, probably said that wrong. Mercatus, potato, distinguished senior. Good to have you on either way. I think I can pronounce Tom. It's not Tome, is it?
Yeah, it's Tom.
Okay, good to see you, Tom. Gotcha. What about that discussion we were having? Are we restrictive right now?
I don't think so. I agree that I think the so-called neutral rate that the Fed talks about is higher than what the Fed has been talking about. I think real rate is probably closer to 2, given the amount of debt, given the strength in the economy. And then if you add 2% inflation target, 4% is a number. Rates right now are 5.5. That's modestly restrictive. And given the fact that the economy in 2023 was stronger than expected, and we're starting off pretty well this year, I'd say that the neutral rate is higher as some people are arguing right now, higher than the Fed's recent forecast.
Well, we're slowly finding religion, I think, from 150 basis points, and now we're 80. Will there be cuts in July, do you think, now, Tom?
Well, I think the Fed, given the recent testimony of the chairman, I don't think the Fed will flip too quickly and too much, but I would say that 3 cuts would be a surprise to me, given the strength, unless if something happens in the next 2 months that changes things or changes perspective on people. But I'd say 2 cuts at most, and if the economy stays as strong as it has been, and I wouldn't be surprised by that, since it's an election year and there'll be no tax increases and no spending cuts, and the amount of spending going on is pretty strong. I would say we're going to have a relatively strong 2024, and then 2025 will be, if there is an adjustment year, will be in 2025, would be my suggestion. And in that environment, I don't think I'd be in a hurry to cut rates either. But I don't think they're going to change their dot plots that much, because they don't want to shake the market up. But in their minds, they know that they have a chance of losing their inflation gains if they cut too soon. So they've got a lot on their plate here this week and for the next 2 or 3 months. And
sometimes I wish we could talk to God. I do, Tom, because I would ask questions and I want definitive answers. You need to, and you're as close as we have today. So what was there's 2 scenarios. The inflation really was transitory and caused by the pandemic and supply chain issues, and it's just now coming back down. Or we spent too much money for the last 8 years, the Fed's balance sheet is too big, and there's some permanent inflation embedded in the system that's going to make it tough to go back to 2 from 3. Which is true? Is it really going to be hard, or is there too much money sloshing around?
I think there's a lot of money sloshing around, for sure. I think it is going to be difficult to get to 2%, because this is, it was a supply and demand factor, but the supply has been pretty much addressed. And now we have the hangover of this $6 trillion spending, and that we have to deal with. So I think that's part of it. Now, I will say to you, I think there are 3 reasons the Fed would advance their cuts. One is that they actually get much closer to 2% in the next 2 or 3 months than I think they will. Second, the economy has a surprise slowdown. And third, if the banking industry shows effects of its wounds, that is, of the higher rates so quickly and their asset quality begins to show deterioration, that might accelerate the cut as well. So those are the kinds of conditions I think of before the Fed actually would want to cut rates very soon.
When you look at what scares people, like inflation in South America in the past, can't 3%, I mean, I can live with 3%. Can we move the goalposts, make it a lot easier?
I think moving the goalposts would not make it easier. We'd have 3% inflation and then 4% inflation, and then on from there. Once you move those goalposts, your credibility goes down. And I think driving to 2% would give us, in the long run, a more stable economy. People would have more confidence in the Fed's ability to maintain 2% going forward. But if they give that up, as they did in the 70s, and little by little, then they pay a dear price for it later on. And that's been the history, I think.
You saw the budget proposed. Yeah. You know that neither candidate is going to do anything with entitlements that we have. So what type of long-term GDP growth are we going to be able to have? And do you think that the debt to GDP stays over 100 permanently? And what does that mean for GDP growth? How do we deal with that? Do we ever?
I think given the current Congress and administrations we have, I think yes. I think government spending will be hard to bring down. Government taxes will be hard to increase. So I think we have a permanent deficit well in the future. And the implication for that, as pointed out by the CBO, of the Congressional Budget Office, means that your productivity does suffer in time, and your real growth rate falls from 2.2 or 2.3% down to 1.8% is their projection. I don't think that's unreasonable at all. So I think we do have some real issues that this country has to face. And I think the interest on the debt alone will push that debt up unless we get things back under control, which we are showing no tendency to do right now in this country by either the Congress or I think either administration that might come in the future. So I think we have some huge challenges, and only when it does start to really push through with higher inflation on a continuous basis will the American people become very impatient and begin to require some of that be addressed, but not anytime soon.
Okay. Mr. Honig, thank you. Former Kansas City Fed president.
There, we got it right.
We got it. I'm not going to forget either. And Bartels, Marianne Bartels.
Bartels.
Okay.
Okay, coming up, much more in today's Market Movers and what you should be watching ahead of the opening bell on Wall Street. We'll bring you that. Take a look at the futures right now, about 66 points higher. If we opened up on the Dow, S&P 500 would open about 14 points higher. NASDAQ looking to open about 39 points higher. We are coming right back, and we will be talking TikTok after this.
.com.
Shares of Ulta Beauty are falling. The specialty retailer's fourth quarter sales rose 10%, beating forecast. But Ulta is projecting full-year earnings below the street's expectations and says that it sees a slowdown in the industry. The company's dealing with softer sales of makeup and hair care products, and that stock right now down by about 6.5%.
PagerDuty is tumbling today. The cloud computing company's fourth quarter results just edging past forecasts, but current quarter sales expected to come in below estimates. Management saying that it sees strong momentum from mid-market and enterprise customers, but they still see headwinds from small business. You're looking at that stock off now this morning, a little over 8.5%.
And we're watching the shares of Chinese EV maker NEO, the company, said it plans to reveal its mass market brand in May. The new brand will be named Ledao in Chinese, which is, it says, is meant to reflect families having a happy time together. That's nice. Must be a minivan, I guess. NEO has so far focused on the higher end of the market with SUVs and sedans priced higher than Tesla's models. It plans to unveil the brand in May, launch it in the third quarter with large-scale deliveries by the fourth quarter. And it would be good if they could get Keanu Reeves as a spokesperson.
I was just looking at a clip from Neo.
Huh?
From The Matrix.
If I got a
Different Neo. That was spelled Neo.
like the guy John Sarah for Sarah Lotion.
Right.
Saturday.
I'm a thinker. I mean, I could be on Madison Avenue. I think I can help.
Perhaps.
Yeah.
Goldman Sachs CEO David Solomon putting out his annual letter to shareholders. Leslie Picker joins us right now. She's got the breaking news on that. Hi, Leslie.
Hey, Becky. Yeah, we obtained a letter CEO David Solomon plans to send shareholders today where he talks about the firm's strategy, his views on the macro environment, AI, and China. Solomon calls 2023 a, quote, year of execution for Goldman Sachs while saying he's optimistic about 2024. Solomon says the firm stands to benefit as capital markets rebound. Tonally, this may be a little more constructive than comments he made 6 months ago at a conference where he said activity is improving, but it's still a ways off. As for the broader economy, well, Solomon says it's, quote, proven more resilient than expected and markets are predicting rate cuts, though I think inflation may prove stickier than many anticipate. He said CEOs, quote, tell him that economic conditions for the consumer, particularly at the lower end of the income strata, have gotten tougher and they're seeing behavioral changes. But the Fed now has room to ease if economic conditions start to decline. On AI, Solomon says that it's, quote, important to keep perspective that, quote, adoption rates will lag. The most fascinating use cases are in their early stages, and a lot of work still needs to be done in data security, regulatory frameworks, and ethical considerations for the technology to reach its full potential. He does believe that there's, quote, no question that generative AI is going to disrupt a wide range of industries, guys.
Wow. AI is on everybody's minds. What can be done?
Yeah, and it's interesting because we're seeing, you know, it was 2 weeks ago that Jamie Dimon said AI is not just hype, there are real use cases here. So you've got the banks really investing money in here into AI for things like operations, for the way that they're communicating with customers, for the way that they're gathering research. So it's already being done in real time. And then, of course, they have a ton of customers and clients who are AI companies themselves. So they're really on the forefront of what this technology is. So I thought it was really telling that Solomon said, you know, this is an amazing technology, but there are some things that we need to work through before it becomes essentially ubiquitous.
Leslie, thank you. Good to see you.
Okay, coming up next, TikTok creators voicing a lot of concern over the possibility of a ban of that social media app. The father of two of the most lucrative TikTok stars out there, Mark D'Amelio, joins us next to talk all about it. And then later, former pro tennis player, now tennis coach, Brad Gilbert's going to join us to discuss the move by the Saudis to invest in tennis. He's going to join us live from Indian Wells, California, where he's coaching Coco. We're going to talk to him all about that as well. Squawk Box, come right back. Welcome back to Squawk Box. The House passing a bill that could lead to a potential TikTok ban or potentially a sale. We'll see. Yesterday, former Treasury Secretary Steve Mnuchin sitting at this table, breaking the news right here that he's working to get a group of investors together to buy the company. Take a look.
I think the legislation should pass, and I think it should be sold. I understand the technology. It's a great business, and I'm going to put together a group to buy TikTok.
You're trying to buy TikTok?
I am, because it should be owned by U.S. businesses. There's no way that the Chinese would ever let a U.S. company own something like this in China.
Joining us right now is the father of two of the most lucrative TikTok stars out there. Mark D'Amelio is here, and he's the co-founder of D'Amelio Brands, and you've made much of your empire on the platform that is TikTok. So what's going on inside the D'Amelio family as you're watching all of this play out?
I think it's interesting. Like Charlie texted me the other day. She's like, "Is TikTok getting banned?" And we went through this before over a year ago, where we knew early on that with what happened with Vine, that we would, because we're in social media, we would need to diversify, which we've done. So we're although TikTok is probably the biggest platform for us, we are on all the other platforms too.
And so, I mean, just as looking at how this plays out, how important is it for you? And are you thinking, okay, I got to transition even more to these other platforms? Do you say, I got to call Stephen Mnuchin and try to get in on buying TikTok?
Yeah,
be part of that group. What's the thought process?
I'm open. If Steve Mnuchin wants to call me, I'd love to talk with him about it. But I think we're in a very fortunate position. Our run with TikTok's been great. I do not want to see it get banned, but it could happen, and if it does, we're already planning.
Do you think it's a national security threat? I mean, you've spent a lot of time on you've probably thought about this, maybe even more than most Americans.
I mean, it starts to get outside of the realm of what I do every day. I haven't seen any evidence, not that I would, but I haven't seen any evidence that it is a national security threat. I think it is probably one of the biggest platforms for free speech that I've ever seen happen, and to me, that is very important. Probably the people that have been able to build careers and get their message out there. I can hold up a phone right now, and I have 10 million people that potentially could see what I have to say, and it could, so that is really important.
What's the difference in your mind between TikTok as a platform versus Instagram as a platform versus YouTube Shorts as a platform? Meaning, how do you think about it? As you've said to yourself, okay, I'm going to diversify. What do each of the platforms bring you that is potentially different, or do they all feel very similar to you?
I mean, I think both both Instagram and YouTube have tried to mimic TikTok. I think TikTok was lightning in a bottle. I mean, it still speaks to me. Whatever my interests are, it comes to my For You page, and it's been.
And you think you think that algorithm is better, for example, than what you're getting on these other platforms?
It has been, yeah. It just seems to know you, and I think that's why everyone just loves to scroll on it.
What about, I mean, you've created now a whole number of direct-to-consumer businesses and a number of brands that now you're wholesaling as well. In terms of marketing, in terms of actually a platform that's selling product for you, is TikTok the one that's still, is it, maybe because the numbers are just so big, but from just an effectiveness perspective, you say, okay, one does better than the other for me?
I think Instagram shopping, TikTok was fairly new on the shopping side. Instagram's been great. It's one click. My daughter Dixie buys she's just one click shopping.
Same. I buy a ton of stuff on Instagram.
Pretty awesome. So they're both good.
And in terms of being able to port over the users, being able to promote sort of the brand and the empire, if you're on TikTok now and you're saying to yourself, okay, I got 6 months from now, this may not be here anymore. What do you need to do? And are they the same users? I mean, how easy is it to say, hey guys, meet me over at Instagram, or is it a totally different situation, and then how do you do it?
I don't think it's totally different, but I think I find myself on X more than other platforms. I think
X you think is working. Are you guys?
For me personally, for my news, for my interests, and
do your daughters use X too?
Not as much. They probably are more on TikTok and Instagram.
Porting the whole family though over, can you do it? I mean, do you think you can ever get the same kind of, because you were sort of both early in TikTok, and there was that lightning in a bottle kind of moment, can you get the same kind of volume of folks following you on these other platforms now than you could before? And I think a lot of people who live on TikTok today are thinking, am I late to the game if I haven't actually joined these other things or I haven't really spent enough energy on it?
It will be difficult, our numbers on the other platforms, but there's other creators like Mr. Beast is way bigger, although he's probably top 10 or top 5 on TikTok. He's huge on YouTube. So we just have to diversify, and we have been, and then there's always going to be other apps that come out after this.
What's the top product you're selling right now?
So we have two products. One is D'Amelio Footwear, which is a women's footwear brand, and we have Be Happy Snacks, which is a snack brand.
Blowing up in a big way.
Walmart is doing really well, and we're opening up 7-Elevens and Albertsons will be launched in May.
It's good stuff. Mark, thank you for coming this morning. Appreciate it. Nice to see you. Thank you.
Coming up, Wyatt, the tech rally has room to run, according to some. And then news of an up to $2 billion investment in tennis by the Saudis, causing a huge stir in the tennis world. We're going to speak to tennis coach and former tennis pro Brad Gilbert. We'll be right back.
CNBC.
Good morning. Stock futures pointing to a positive open on this final trading day of the week. The Dow trying for its first positive week in 3. Meantime, Adobe, key mover in the pre-market, the software giant falling hard on soft current quarter guidance. And is Saudi Arabia forcing professional tennis to take a hard look at its future, just like the country's recently done with golf? We've got that story and so much more on this Friday morning as the final hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. It's like 60 degrees out there. Nice day yesterday. I'm joking in. It's a Friday.
I did not bring a coat today.
I didn't either.
Yeah.
No, I usually don't anyway. I'm like JFK. Along with Becky Quick and Andrew Ross Sorkin. U.S. equity futures at this hour are indicated. That's also, we got that going for us, which is nice. Green across the board there. Treasury yields this morning, 430 or so on the 10-year, 427. We've been talking about that. And what it means for whether we get rate cuts or not, I don't know.
Okay, well, let's get down to the New York Stock Exchange. Our good friend and senior markets commentator Mike Santoli is standing by, looking at the markets. What is highlighting on your mind right now?
Well, Andrew, that yield move that got the 10-year up to around 430 yesterday definitely got the market's attention. I think that's one of the themes that's been running through. We figuring out if we have to rethink the rate path, the inflation path. Nothing too decisive yet, but what you see here is the S&P 500 over the last 6 months, along with the equal-weighted version of it. You see equal weight in the orange here outperformed off the October low, but then it has sort of slowed down a little bit. We know about the mega cap dominance. We know about NVIDIA's outsized role here. But what we saw yesterday was the equal weight, the broader, kind of population of stocks suffered more, as did small caps, with that yield move higher. And that's been the pattern. The market's been able to broaden when yields have been tame and lower, and it's had a harder time doing that when yields have been going up. So here is a one-year look at the 10-year yield. It's essentially challenging just the upper end of this range we've been in since this start of December, really since the December Fed meeting, when essentially rate cuts were put on the table by Powell. That was the pivot. People are saying 440, that was where we were around Thanksgiving of last year, would mean that we're maybe threatening to get out of this range. The absolute levels are not particularly scary here. It's much more about whether the trend is going higher. We have handled some Treasury auctions this week relatively easily. Take a look at the Goldman Sachs Commodities Index. This is another little quiet sub-theme that's emerging as well. And you've got a little uptrend here. This is a commodity index that's actually very energy heavy. It's sort of consumption based, so whatever we consume most of is biggest in this index. And you see that's obviously been a noticeable move. But again, the absolute levels are not particularly concerning. It's much more about whether it's a trend. It seems like, a little bit better growth and a little higher than expected inflation. It's sort of this higher metabolism economy with higher nominal GDP. We'll see how the markets handle that, Andrew.
Okay, Mike, thank you for that. We're all trying to make sense of what's going to happen this week. Almost over.
Almost. Getting there. For more on the markets right now, we want to bring in Tom Kennedy. He is Chief Investment Strategist at JP Morgan Private Bank. And Tom, the hot PPI and CPI numbers that we got for this most recent month have a lot of people questioning whether we really are going to see a soft landing, whether the Fed's going to be able to cut rates. You're still a true believer.
Yeah, we certainly are. It certainly challenges a soft landing, without a doubt. But when you look at underneath the surface of the inflation data, what are you seeing? Is goods-based inflation was deflationary for a period of time, bottoming out. So we're through that phase. The COVID-induced inflation rebound, if you will, it's hard to say that with inflation coming down, that seems to be behind us. But as we start to look forward, it's all about the labor market. And inside the labor market, we've just gone through a generational surge in labor supply. And that's from a domestic sense and from an international sense. Domestically, work from home behavior seems to be here to stay. A LinkedIn survey from last year, which was the first real test I've seen in a normal time. 2023, what about you guys? I wasn't wearing masks, was going out, everything was fine. 50% of all jobs filled on LinkedIn were either hybrid or full work from home. That's here to stay, so it draws people back into the labor force.
When you start looking at what happens next with the markets, you're looking for a change in leadership. You do think the mid-caps are going to step up and take over the reins?
I think there's a really big opportunity to see a broadening in this rally. The concentration in performance in U.S. tech has been stark. We all talk about it. But really, since October, when that Fed pivot came into fruition, S&P tech sector has led, and at the same time, Russell 2000 and mid-caps have outperformed. It's quite odd, given that the tech concentration is so low. I think it can broaden out for a few reasons. Earnings should move from, in the mid-caps, from negative last year to plus 10 this year. Valuations are relatively cheap. And there's a heavy concentration in industrials, which is where the U.S. government is spending. And even if we get a change in leadership at the president level, it looks like that spending should be durable.
Okay, what if the inflation picture really doesn't tame down anymore? I realize it's only 2 months that you've seen CPI and PPI higher, but if you're not going to get back to 2%, that means the Fed's not going to be able to cut rates. And it seems like a lot of what we've seen, the frenzy in the market, has that as a predication.
Yeah, I agree with your point. I think this is one of the biggest risks the market is dealing with. That's why we spend so much time talking about it. The path towards the disinflation, I think, is that labor surge. The Fed, I don't think, needs to wait for 2%. Just confidence that they can get there.
Well, confidence that it's not going to go above 3%. And at JP Morgan, Jamie Dimon has been the one saying, I don't think they should cut rates yet, that there's more concerning things coming potentially.
Yeah, Jamie is a steward of the Fortress balance sheet. He's always worried about what the risks are. We're in the room trying to help him figure those out. My job is to help clients navigate what the most likely scenarios are. The immigration surge is one we haven't talked about yet. A generational shift as well. 1% of the US population last year was from immigration. We haven't seen population growth like that since 1910. Now, to bring the election in here, right, that stalled because we had a literacy test that slowed immigration. That's a risk here too. But to really think the labor market is going to
slowing immigration is a risk?
Yeah. Inside the election, this is one thing that really separates President Trump from President Biden in the way that they've handled immigration.
But you're saying that open borders are a good thing, or?
For the U.S. economy, they're fantastic. From the Fed's perspective, to tame inflation, immigration is a fantastic thing for them. You're getting the calming in the labor market just from the supply side rather than having to lay folks off. It's a fantastic opportunity set for them.
Wouldn't you like to see legal immigration instead?
Most of the immigration has been legal. I mean, this is always hard to see in the data exactly, but the Biden administration has ramped up visa and immigration from a legal sense, and of course there's been illegal immigration as well. But this is one of those places as we look to the year ahead where economics and politics really intersect. And for investors, I think we generally look around in history and say, elections don't matter. But this might be one instance where it does matter because we've been very lucky to have immigration that has cooled this labor market the way it has.
And you think that's just misunderstood by the American public?
No, I just think it has political factions to it that are beyond just pure economics. In any Gallup poll we look at, it's the biggest issue for Americans is immigration. And so it's polarizing. But if you just look at a simple economy, if you see strong demand for jobs, you can cool that in two ways. Bring more people to the workforce, or you have to cool that demand.
But then there's the second order effect, which I think is what Becky's referring to, which is the legal immigration, which has been ramped up.
Yes.
Plus the illegal immigration. Absolutely. You could argue the illegal immigration, by the way, is also good for the Fed. I mean, I know that sounds completely perverse, but it's the case.
Yeah, I don't think it's perverse. I'm agreeing with you wholeheartedly. You need a balanced labor market to be confident that inflation won't surge back to 3%. And the labor supply has helped quite a bit.
Let's pivot quickly just to talk about the lending situation right now. You were making the point that private lending has been pretty good. If yields continue to climb, what will that mean?
You're starting to see a reopening in financial markets. And from the Fed, when they meet next week, the realist there, the person who's saying, I'm not so sure inflation will go back to 2%, they will look at the IPO market ramping up or opening again, and lending practices go up. Yeah, if rates stay higher for longer, we should continue to see lending activity be subdued and not ramp higher. But I think the market is giving private credit, the private direct lending, the market I'm worried about that. That's a bubble. But when I look at what a bubble is, Becky, it's debt growing in excess of profits, right? A simple definition. And in the aggregate finance market, you're seeing profits up, lending activity track it as well. Just private credit is taking market share from high yield and loans so far.
Tom, thanks for coming in today.
Thank you.
Coming up, we're going to wrap up a big week of headlines for Disney, but next, with Saudi Arabia reportedly seeking to break into the world of top-tier tennis, we're going to speak with former pro and current coach Brad Gilbert. Stay tuned. You're watching Squawk Box on CNBC.
Welcome back to Squawk Box, everybody. The futures this morning, a little bit of a mixed picture at this point. Dow futures are up by about 44 points. S&P futures up by 5. The NASDAQ is a little weaker, down right now by about 12 points. Joe?
Reports that Saudi Arabia may invest $1 billion or more in professional tennis, raising the question about the future of the sport. It echoes how professional golf has been trying to deal with Saudi competition in money. And joining us now, former pro tennis player, current coach Brad Gilbert. He joins us from Indian Wells, California. That's where it's all happening this week. He's coaching the #3 women's player in the world, Coco Gauff. He used to win ugly. You got a book called that, don't you, Brad?
I do, Joe. Good morning.
And he's, we're going to try really hard to pull some opinions out of him because he's usually, it's very difficult to get you to ever weigh in on anything. Go ahead.
Good morning. Yeah, obviously this week, a couple days ago, the big kind of surprise announcement that Andre Gadzenzi, the CEO of the ATP, has reached an agreement with Saudi backing for a new potential tour for 26. Also, the Grand Slams, the 4 big tournaments, are also working on a new tour. So potentially for 26, there are 2 new tours coming. And this kind of started, Joe, 3 years ago. Novak Djokovic formed a union called PTPA, and he was trying to bring together a new tour, which nothing has happened. And obviously, with the Saudis, with the LIV Tour, what they've done in Formula One, there is definitely something going. But tennis has been totally lacking for where golf has gone. Prize money, we're in a 14-day tournament here, Joe, at Indian Wells. This is the biggest non-Grand Slam tournament there is. There'll be over 600,000 fans for the 2 weeks. The winner gets $1 million. Last week, the Bay Hill Golf Tournament, 3 years ago, the prize money winner got $1.6 million. Now, because of LIV, the winner got $4 million. So it is absolutely driven up the price of PGA, and you're missing half the players. So hopefully the players, whatever happens, if it becomes a new Premier Tour, the new Saudi Tour, the players stand to get a huge windfall and much needed.
It's not going to be without controversy, I guess, BG, with because it's the Saudis again in sports washing. But what I guess we miscalculated, but we're seeing it in media, we're seeing it with streaming, we're seeing how everything works. Man, live events, you can't DVR them, you can't skip through ads. They're the most valuable content that's created. So everything was in golf. Obviously, that what people were making was totally lowballed, and someone else was making all that money. Same with tennis. So now, would you therefore say that this is a good thing, even though it's the Saudis?
Well, it's a good thing that we're getting the ball rolling. A couple things that are definitely need to be addressed. Both tours, the CEOs, the ATP, and the WTA, it doesn't work like this in professional sports that the CEO represents the players and the tournament. So that is a direct conflict of interest that the CEO represents both sides. That is just a massive conflict of interest. And the biggest difference between golf and tennis, Joe, is every weekend when there's a major golf tournament, especially on the PGA Tour, it's on network television. So right now, this tournament has an exclusive in the States only on Tennis Channel, so which doesn't have a massive cable subscription. It's a good channel, but they don't pay any TV rights to be on right now. So that's something in the near future that needs to happen. Tennis needs to be at big tournaments, especially in Indian Wells, Miami next week, needs to be on major networks to take tennis to the next level where it deserves to be, in my humble opinion.
Yeah. We've had Billie Jean brought us parity long ago, but the parity is nobody's getting paid what they probably should, men or women in tennis.
Well, one thing's for sure. Obviously, the top players are doing well. But the big thing that golf has dramatically changed is the number 100 player. 10 years ago in tennis, we were making similar money. Now the number 100 player in golf is making more than the number 10 player in tennis. So sometimes competition isn't good, sometimes competition is great. So hopefully, besides this one Saudi offer with the ATP and WTA, that now the Grand Slams are going to say, you know what, we don't want this to happen. We're going to get our own tour and try to get you on board. But I honestly believe, Becky, we've been talking about this for 40 years. We've been talking about doing things in tennis since I was playing, since I had hair back in the day. And nothing has ever gotten done. I had hair back in the day. Never like Joe, but I had decent hair.
Well, Brad, I can send you to the right place if you want this.
No, I'm no hair club guy. I'm honest.
No, I'm kidding. I'm kidding. You'd have to go to God. We talked about God earlier.
Brad, what do you think of like the sort of zeitgeisty? I don't know if it's even in the zeitgeist anymore. That there was a view that Saudi was in a penalty box of sorts around human rights issues and other things. This was brought up, obviously, even by Jay when it came to golf in terms of why they were trying to push LIV away. ATP may be different. I mean, they're based in London, and it's a very global and international sport. Do people care? Does that matter? Are we overstating this issue? Are we understating this issue? How players are going to think about it? How the audience is going to think about it?
You're not going to, Andrew, you're not going to please everybody on this decision. There's going to be some people that are totally against it. But this is a player's decision, what they're going to decide, how they're going to move forward. And they're taking the money, doing it in boxing, UFC, Formula One, golf has done it. And listen, if they don't have this offer right now from Saudi Arabia, maybe this doesn't wake up the Grand Slams or wake up the other tournaments to get something going. So,
Brad, this is really interesting, though. I mean, you're really just looking at this as the competitive spark and, hey, sit up and pay attention and somebody start paying these players what they're worth.
I totally think so, Becky, because I think the players right now, in my humble opinion, are completely getting the short end of the stick. And if we get a same offer from the Grand Slams to do the tour, I would say go with the Grand Slams because they already control the 4 biggest tournaments, and that would make the most sense. So I am extremely hopeful that the Grand Slams now they're calling their tour potentially the Premier Tour. So to me, there's probably no room for 2 tours. So hopefully they will figure something out and the players will get the windfall. And Becky, one thing to keep in mind, women's tennis is by far the biggest women's sport in the world. There's not even, like, of the top 10 highest female earners in sports, I believe 9 of them are tennis players. So tennis definitely has all the eyes on the female side. Yeah. In men's tennis, it's a big sport, but nothing like, some of the other team sports. But I'm extremely hopeful this will get, people going and make some...
Yeah, this is leverage.
There you go. Yeah. Exactly what we need.
So you're with Coco. Are you able to calmly watch her matches? Have you been able to achieve some type of zen where, knowing you as I know you, where I watch you and I can't even I have to turn off the TV and not watch. Watching you watch the people you coach. Are you better yet? Is there a drug? What's happening?
Is there a drug? Adrenaline? Coco had a tough one last night. She got through. She plays the semis tonight against Maria Sakkari.
You got any fingernails at all?
Actually, you know what? I have not been biting, because, in the morning I focus on stocks in the morning, I grind on stock. Of course.
Bitcoin. Okay.
What's Bitcoin?
I don't know.
Bitcoin strategy.
I'm not a Bitcoin guy, but I understand it totally because, listen, everything is supply and demand. If people aren't interested and they're not buying or selling, but the genius of Bitcoin is so easy, it's like you can't get it anymore. So there's people buying and selling.
Your last big pitch, I told you no penny stocks. Don't say that, but your stock was Microsoft, wasn't it? You're a genius.
I've been Microsoft now for 10 years, and I'm telling you, the banks are like if you park your money in the banks, you've lost your mind. To me, Microsoft is the modern bank. You get a nice dividend, could be better, I wish it was, and you actually have a chance for growth. So I tell my kids this, listen, park your money where you have a chance for growth. Microsoft, and now with AI and everything they're doing, I think to me is a genius company. And if whether or not you're young or old, park your money there. I've had a little bit of dumb luck, I must admit, with NVIDIA the last year. And I won't call it a penny stock by any means, but I have a big position in on holding, and we got smoked the other day on earnings. That's Roger Federer backed. Do you have on cloud sneakers yet?
No, I don't know that one, and I'm going to have to check the price to see if you violated any of our agreements.
No, well, it's a $12 billion company.
Okay, all right, that's good. That's good. Okay,
That's fine.
That's fine. I was going to ask you what you've been telling Coco. Can you give it? Is there a life lesson you can tell us about winning, or I don't know? You were winning ugly. That's all I know.
So,
that's what I tried. That's what I.
You know, I told Coco yesterday. I mean, she struggled with her serve massively yesterday, and I don't know of any player that could have got through besides her yesterday. She's a tough cookie. She's incredibly resilient, and she just competes. And the thing about tennis is when you're struggling, you got no teammates. And it's about finding a way to manage yourself, Joe, when you're not playing at your best.
Well, that's you. That was you. That was you winning. That's right.
I try to do that with everybody I coach, and hopefully they have more talent than me.
All right, we got to go. Brad, good luck. Good luck to Coco. You're in a great part of the country, too. I love Indian Wells. Good to have you on instead of once a year for the U.S. Open. Good to see you.
I will see you at the U.S. Open. Nice to have me on in March.
Right. Enjoy myself. Okay. See you.
Coming up on the other side of this, we got breaking economic data. We'll come right back on Squawk on Spark.
Among today's top business stories, Adobe falling post-earnings after it issued quarterly revenue guidance that disappointed the street. Not including this morning's stock move, Adobe shares are down 4% this year versus an 8% gain for the S&P 500. You can check it out right now, though. Stock off by about 11.3%. And then there's McDonald's suffering a system failure that left customers in some parts of the world unable to order food. Early this morning, the website Down Detector indicated that there was a spike in reports of problems with the McDonald's app in Australia and the UK. The company said the outage was not related to a cybersecurity event and that it was being resolved. And Goldman Sachs CEO David Solomon out with his annual letter to shareholders. Solomon says that he's optimistic about 2024 and that Goldman stands to benefit as capital markets improve. He says inflation may prove stickier than many people anticipate, but he also says the Fed has room to ease if economic conditions begin to deteriorate.
Steve Leisman is standing by with some breaking economic data. Steve, the numbers, please.
Import prices rising by 0.3%, Joe. That is right in line with expectations. Unchanged compared to January's 0.8%. That is unchanged, unrevised. Export prices up 0.8 compared to the consensus of 0.2. So the export prices was higher than had been expected. That is down, though, however, from the January number of 0.9. Non-petroleum import prices up not very much, up 0.2%, and petroleum import prices up 1.7% versus January 1.8. And it looks like the year-over-year is still negative, minus 0.8% year-over-year. So we have been, up to this point, importing deflation or disinflation from the rest of the world. Looking at the New York State Empire Manufacturing Survey, minus 20.9. That's a big miss. We were looking for minus 6, still a negative number. You can see their new orders were negative, prices paid up, prices received up, and employment negative 7.1, as well as the work week as well. So I'm looking here, the 2-year and the 10 have both been towards the higher side this morning. We had 428 on the 10 and 470 on the 2, and it looks like pretty much in line there. Where's that 10? 429 and the 2, 471. So maybe a touch higher. And looking at the probabilities, guys, we're down below 60% now on that June probability. Had been, 69 earlier this week before the inflation numbers came down to 60, trading at 58.9 right now, and just 11% for May. So still odds-on bet for that June rate cut, but, that's kind of been withering as well. Becky?
All right. Steve, thank you very much. When we come back, what will it take for Boeing to fix the list of issues raised by January's Alaska Airlines flight emergency? We will ask a former investigator for the National Transportation Safety Board. Squawk Box will be right back.
Welcome back to Squawk Box. A few of the latest developments in the investigation into the Boeing 737 MAX door plug blowout. Reports saying that Boeing failed more than 30 audits out of 89 in a 6-week FAA examination of the 737 MAX manufacturing process. Separately, the National Transportation Safety Board saying security camera footage of factory work being done on that door plug in question last year has now been overridden. We talked about that earlier. Boeing saying that, like so many other companies, it does not keep security footage for more than 30 days. But then NTSB chair says this will complicate its investigation. Joining us right now is a former NTSB investigator, Alan Dale. Good morning to you. What do you make of this, and how hard is it going to be to actually investigate this case?
Well, it's going to be complicated. Certainly, Mr. Calhoun knows there are people in Boeing that know whether or not the paperwork trail actually existed. If they didn't do the paperwork, he needs to tell the chairwoman. If the paperwork exists, he needs to find it and turn it over to the NTSB. I agree with him about the video camera footage. The FAA, for example, overwrites our own videos from air traffic control, I think, every 30 days. So that may not be nefarious, but he's got to fess up and tell the NTSB what happened and when.
Alan, just tell it to us straight. When we read these headlines, I think it's very troubling for a lot of Americans, a lot of folks around the world who board these planes. And I think we don't really know or understand, perhaps the way you would or do, whether we should be genuinely concerned that somehow the culture inside Boeing is not of excellence and is genuinely troubled, or is it something else?
Well, certainly the culture needs to be addressed, and that's up to the new CEO, Mr. Calhoun. But keep in mind, when you board an airliner today, you've got 1 chance in 10 million of dying. Now, try to get those odds from your surgeon. It's not that dangerous, but it needs to be improved. And we need to remember Charlie Wilson's 1950 quote when he was confirmed as Secretary of Defense: "What's good for General Motors is good for the nation." So we're going to have to help him get Boeing back on track. And there are some things that both Mr. Buttigieg could do and the new FAA administrator, Mr. Dixon.
And what are those things?
Well, I think Buttigieg should, because of the threat of whistleblower harassment, we don't know what happened with John Barnett, who committed suicide several days ago. I think Buttigieg should ask the FBI to investigate that, just to make sure we don't have a situation like Ralph Nader faced back in the 60s with the Corvair, and General Motors put undue pressure on him when he exposed the problems. Just so that's a job for the FBI to find out, and certainly Mr. Buttigieg can assure that. And another thing, very quickly, Dixon, the FAA administrator, could send a large group of former FAA quality inspectors, maintenance inspectors. You could hire them temporarily to go into the Boeing plants and make sure things are back where they should be. Boeing had a great reputation, and it slipped when they merged with McDonnell Douglas in this competitive world. They're struggling.
Alan, do you think they need different management? Do you look at what's happened under Dave Calhoun and say these problems are persisting, they're continuing, they're getting better, they're getting worse?
Well, there's a lot of inertia to this kind of situation. I think Calhoun is trying to address this. He needs to do more to protect whistleblowers. He certainly needs to find those records and talk with the chairwoman of the NTSB and either fess up. We never had the records. Okay, another example of our failure of quality control, or the records.
That's what I was going to say. If they don't have the records, it's a quality control issue. And then you're reading these reports saying they're using Dove soap and hotel card keys to check the seals and things, between doors and things. I mean, does that make any sense to you whatsoever?
There's a lot of things that need to change, and I'm not sure getting another CEO in right now at Boeing is what they need to do. Let's give Mr. Calhoun a chance to fix this, but let's also get the government involved to ensure this vital company survives and prospers. And there's a number of things, like I said, we all need to do, the government needs to do. As a former bureaucrat myself and a whistleblower, I know you need to make sure people are talking to you, Mr. Calhoun, and you need to make sure you go back to quality control. It's back to basics at Boeing.
What do you make just more broadly about government regulation of the airlines? As you said, the chances of getting of an accident are uniquely low. I'm knocking on in this case, the plastic in front of me. But I ask just because I think there's questions about, whether we have enough folks inside the FAA, what's happening in the towers these days, what kind of regulation or monitors are in place at a place like Boeing at the airlines when they're doing different mechanical work and the like. What do you think of that?
Well, clearly in 1978, when Congress deregulated the airlines, they didn't give the FAA any more resources, so they didn't have the inspectors they needed, and they still don't, in my opinion. I've worked with those guys and gals. They're a great group. There's not enough of them. We also know there's controller shortages. Nobody wants larger bureaucracies, but I think it would be wise to invest in people. And yes, both the NTSB, who I think has just got authorization for 70 new employees, I think that's great. We need to look again at the controller shortage and the FAA inspector shortage. But clearly, Calhoun has got to continue his leadership and clean up his act, or the company's act, because Boeing needs to come back for America's sake. And we can talk about the MAX aircraft, the 737, specifically some other time. It still needs a few fixes, I can tell you. But
Alan, he wasn't CEO, but he was there for the whole Eulenberg fiasco. He was on the board. I mean, you don't just date it to when he started. I mean, I don't know. Everybody says the same thing. No, you don't want to switch CEOs in the middle of a... But I don't... What would it take for you to say, okay, yeah, they aren't talking to him, it's not working, the things that need to be done at the top, you know what they say about a fish, where it rots from? I mean, when do you finally say enough is enough? Would you ever say that?
Well, yeah, if things don't improve in the next several months or...
It's been years already. It's already been years. It's been 5 years.
Skip around, he says that, he's right. But they better start improving in the next several months, or maybe they do need new leadership there in Boeing.
Alan, we appreciate your perspective on all of this. We thank you for joining us this morning. Have a great weekend.
Thanks so much for having me.
Coming up, Disney Plus getting swarmed by those looking for the latest Taylor Swift fix. New York Times columnist Jim Stewart will talk streaming with us after the break. And of course, the latest on Disney's boardroom drama. But first, as we head to break, check out the shares of EV maker Rivian. The stock getting an upgrade at Piper Sandler, earning an upgrade. Or we could say Piper Sandler upgraded it from neutral to overweight, with a price target from $15 to $21. Piper believes investing in Rivian is risky, but following the stock's post-fourth quarter sell-off, it likes the demand it sees for the company's new R2 SUV and is happy with Rivian's plan to delay CapEx spending. Stay tuned, you're watching Squawk Box on CNBC.
as other people.
Welcome back, everybody. It's been a pretty eventful week for Disney.
What's the harm of letting activist investor Nelson Peltz or Jay Rizzullo have a seat on Disney's board? The answer is simple. If they succeed, Disney could suffer the same fate as other great companies that Peltz has previously infiltrated, such as GE and DuPont. Nelson Peltz has a long history of attacking companies to the ultimate detriment of
That's from a video Disney released in an attempt to fend off activist investor Nelson Peltz. Peltz's fund, Trian, issued a lengthy and spicy response, in part saying, "This charged and disingenuous rhetoric seems calculated to distract shareholders from Disney's poor track record and sidestep accountability." Okay, joining us right now to talk about the latest in the drama at Disney and whether the new Taylor Swift film will move that needle for Disney Plus is Jim Stewart. He is the New York Times columnist and CNBC contributor who also wrote a book on Disney. Jim, I have been a little struck by how strong Disney has come out against this attack. A lot of times you'll see big companies kind of playing like they are above the fray, like they don't want to get dragged down to the activist level. But the ad we just showed is almost an election-style campaigning ad that really comes out, and that's just the beginning of what Disney has had to say about this. What do you think?
Yeah, I can't remember a recent proxy fight that has really become this nasty, and it is surprising given that it's coming from Disney, you know, one of the most admired, best-known companies in the world. If there's any company that you thought might have been able to sort of float above the fray, I would have guessed that it might be Disney, but that's not what's happening. I mean, I've done a pretty deep dive into Nelson Peltz's track record at previous companies, and however you feel about him and whether he should be on the Disney board, it's just not true what that video says, that he's been destructive of value in the other companies where he has been on the board. They've released figures that show that the Trian, since when Peltz or a Trian partner goes on the board to when they leave, the shares gain roughly 17% on average. And that's substantially higher than the S&P over the period since Trian was formed.
So why do you think Disney has taken this strident of an approach?
Well, I think there are a number of reasons here. First of all, I think, you know, no company, and by the way, when I've talked to a lot of these people where he's been there, none of them were happy when Nelson showed up as a shareholder. You know, management wants to continue their plans. They want a board that pretty much goes along with what they have to say, and they don't want someone barging in, asking tough questions, and then, by the way, taking credit in some cases for what they said they were going to do. Anyway, I think that's just human nature. But this goes a little farther than that. I think Disney, I mean, Bob Iger himself, who, as you know, had an unbelievably successful career there, left, now has come back and is, you know, in round two trying to, you know, save a company that is in, you know, very difficult circumstances, not through any manager's fault, but through the changing nature of the industry, and is in the middle of a turnaround plan. And I think he wants credit for that. He thinks it's working. And the last thing he wants is someone like Nelson Peltz showing up, getting on the board, and then saying, oh, I'm the one, I got them to cut costs, I got them to do this, I solved the streaming crisis. You know, there's not enough room in the room for these two egos.
Hey, Jim, one of the questions that's been asked about the Nelson Peltz sort of scorecard is when you're measuring it, right? Are you measuring it just when he's there on the board, in which case I think there's no question that actually, on the whole, the companies that he's been involved in have outperformed. I think the question becomes, and you know this better than I do, if you extend out the timeline, if you will, to when he's not on the board, what happens after he leaves the company, and this sort of concept, and maybe you think it's a mythical concept or a mythical argument, but it's the argument that Disney was trying to make, that in many of the circumstances, the stocks have fallen, and the argument is that during that period when he's on the board, they have done things that are short-term oriented to juice the stock.
Well, you know, obviously you can affect the results by picking the beginning and the end time tremendously, but I think that what Peltz is saying is a reasonable, you know, it's not the only way of measuring return. And he certainly has argued very strenuously that he is far from a short-term investor. He's not like the typical leverage buyout artists. He's not looking to go in there and do something quickly. I believe he's put out in their white papers that the average tenure of their holdings is about 6 years, which is, is pretty long term for, he doesn't like to be called an activist investor either, but he is considered an activist investor, and that's pretty long term. So again, I don't think it's entirely fair to say he's just looking for short term results. But there is no question that after he's out of these companies, some of them have not done as well, and he's still in a company like Wendy's, which did very well initially, and now has been struggling somewhat. But yet some of the tenures are really quite impressive. Procter and Gamble, Heinz, Kraft, which then spun off Mondelez. These companies have done very well.
Hey, Jim, want to thank you for your time today. Wish we had more time, but next time.
Okay, great. We'll see how this turns out.
All right, coming up, AI winners and losers, a group of stocks you need to watch. After a break, we'll be right back.
I firmly believe that all of these technologies are just going to be an accelerant. The state of the art as it relates to Sora allows you to create these really small snippets of video. And the technology is amazing in that it now understands physics, it understands interactions.
That was Adobe CEO on CNBC yesterday speaking about the AI boom. Joining us right now to talk tech and specifically stocks that he likes and doesn't like in AI. Eric Lynch, Managing Director at Sharp Investments. Good morning to you. What is your sense of Adobe, and what companies do you like, and what don't you, given that it seems to be an all-in situation right now where there doesn't seem to be a lot of differentiation in terms of how people seem to be thinking about AI?
Yeah, good to be here, Andrew. Thank you. So I think we're at a kind of where's the beef moment for AI, where all the promise needs to be delivered this year. If you look at investors' reactions to several AI kind of stories in the past week, Broadcom, Marvell Technology, Oracle on Monday, and most recently with Adobe yesterday, what you're seeing is a reaction to slower growth than expected. Just to spit some facts to you, revenue growth for the S&P IT sector for 2023 was only 2%. It trailed the S&P's 5%. And so if you take out also NVIDIA's earnings estimates, which are obviously blowing it away from Q1 estimates, the IT sector's earnings growth year over year for Q1 falls from 19 to 6. So now that interest rates reductions are really off the table for the immediate future anyway, it looks like, given PPI, CPI, jobs prints, I think investors are showing a much more discerning orientation to these names. Adobe's a great company. It's had a good quarter, 12% revenue growth, 18% profit growth last night. But the issue, Andrew, is that the stock's up 80% year over year. And for all the exciting things like Firefly's AI generative applications that they're implementing into the suite, they didn't up their guidance, and it's really not having a measurable additive imprint on the run rate. This is a business that was growing 20% year-over-year revenues from.
So who do you think becomes a winner? You know, we keep talking about how this is going to revolutionize the world, and I think it will in many ways. I just don't know if it all redounds to some of these companies or becomes a feature, if you will, of all of these products.
Yeah, well, I think the first derivative, obviously, are the chip makers and the hyperscalers, which we've seen that in the stock prices, NVIDIA, Microsoft, AWS, and most recently Oracle. Oracle is really guiding for 50% infrastructure cloud growth going forward because its use case was really generative AI that it needed for its superior tech stack. So these names are all benefiting. It's the second, third derivative stories, which you mentioned, which, technology is always a competitive game. And there's this probably assumption that's not correct that the new technology is just going to be additive. Oftentimes it just cannibalizes the existing. And that's why IT spend really year over year isn't up. And that's why Marvell and Broadcom didn't really show a lot of growth at the aggregate level, even though AI is growing nicely. So I think what investors need to do is look for businesses where the AI imprint is really going to materially grow earnings and revenues going forward, and not just be kind of a story that's cannibalizing the other tech spend.
Eric, I want to thank you for joining us. I want to wish you a very happy weekend and appreciate your perspective on all of it. Let's take a quick final check on the markets right now. Dow looks like it would open up about 43 points if we do it in about a half an hour, and it stays that way. NASDAQ would open off about 15 points. The S&P 500 up about 4.5 points. Make sure you have a great weekend. It's been a long but good and crazy week. And a lot of news at this table, by the way.
Parting in such sweet sorrow.
It is. Make sure you join us next week. Squawk on the Street begins right now.
Good morning and welcome to Squawk on the Street. I'm David Faber with Sarah Eisen and Mike Santoli. We are at post 9 of the New York Stock Exchange. Jim and Carl have the morning off. Let's give you a look at futures as we get ready to wrap up the trading week 30 minutes from now when we begin. I don't know what that says. I guess the NASDAQ might be down a little bit, Mike. Is that what that says?
That's exactly what it says.
See? All right. Yeah. All right, I got it right. Let's get to
How many years have you been at CNBC?
Yes, a few. Back when they barely had a ticker. I go back so far. Our roadmap does begin with tech stock volatility. Adobe shares are tumbling. Microsoft, though, record highs. Tesla and NVIDIA, those stocks, at least recently for NVIDIA, saying it's a struggle may be an overstatement, but they certainly have not been going up. The NASDAQ 100, though, pointing to its first back-to-back weekly loss since last October.
Plus, TikTok's owner ByteDance on track to surpass Meta's Facebook as the world's largest social media company by sales. And the Chamber of Commerce suing the SEC over new climate disclosure rules. A lot to unpack there.
And we're going to begin with the road ahead, in particular for what has been driving this market for quite some time, and that is namely what we call the mega cap technology companies, AI, particularly generative AI. And Mike, I'll turn to you. You know, we just mentioned, of course, NVIDIA shares, which yesterday we discussed. I mean, Jim and I years ago developed this thing called the key to this market, and it does feel like most days, in some ways, it could be considered that.
It's certainly the key to what kind of market day we're going to have. NVIDIA's in a 10% correction. It doesn't look like anything on the chart. It's down 9.7% from its high. It's obviously just had this wild run. We have the whole, confab next week. I don't know that anybody wants to get too negative into it. Others are saying, there were parts of this market, mostly exemplified by NVIDIA, Broadcom, AMD, that just needed to cool down, no matter what else was going on, no matter how great the story was. And that's been the case for a couple of weeks. And honestly, it's sort of happened on some level. The S&P 500 is down 6 of the last 9 days, but is up over that period. So there's been just a little more chop. Yesterday, the market was barely down. The S&P was like down 0.2% or something like that, maybe even less. And the equal weight was down 1%, right? So you had, when yields up, the broader mass of stocks goes down lately, and you can have this defensive move in some of the big tech stocks. Yesterday, Microsoft made an all-time high. And it's because that's what people want when things are a little bit less certain about
so up days
the
are
outlook.
bigger than down days. I mean,
This
we're
week,
up
yeah.
this week on the Nasdaq Composite. We're up on the S&P
Yeah.
0.5%. Nasdaq 100 is flat. Your key to the market. I made a chart for it actually without talking to you
thanks,
before.
Sarah, for the top of the nine. Thank you.
The Goldman Sachs in a trading note this morning, I thought really visualized just how important and how much these stocks have outperformed. If you look at, and they did the 6, right, excluding Tesla, and they go from January of 2023 until now. That's the blue line, and it just shows you what's been the key and how much they've outperformed. The middle line is the S&P, and the 494 remaining S&P 500 companies are below, which are still up, I will say, from that period.
And that is part of the bigger story, is that even though you've had this massive outperformance and added trillions of dollars in market value in 6 stocks, you haven't been to the complete disadvantage of the rest of the market. Actually, though, the big 6 there was also flattened out over the last few weeks. So there's just been a little more churn in this market. Today is a big rebalancing of all these index products, including
Quad, right?
Yes. Well, there's no more quad because they don't have single stock features anymore. Triple. Which is quarterly expiration. But they do have, the XLK, the big technology sector spider. They just reweight the stocks, and Nvidia and Broadcom were being brought down in weight. Microsoft and Alphabet being brought up in weight, and the market seems to just have anticipated that. I think it's silly that we think that this is driving the action. It's a $64 billion ETF, and the tech sector is $12 trillion in market value. Right. Why should it matter? But it seems to matter in people's heads.
I'd just like to come back to Microsoft for a moment, because there is an argument to be made that it is certainly as strong a reflection of enthusiasm around generative AI as anything else, and it diverged yesterday from NVIDIA, for example.
Yeah.
So, I don't know. I mean, is it tech? I'm just curious what may be behind that if we're not seeing that enthusiasm reflected in some of the other typical names.
I think it's a matter of there's this kind of push me, pull you, right? So Microsoft did nothing for weeks. It kind of just,
you mentioned that yesterday.
It kind of just went sideways for a little bit, and has not been one of the leaders. And as I said, with a defensive tape, Microsoft is a net beneficiary. So I think we've done a lot of this, taking money from one pocket and putting it into the other when the macro has been quiet. But of course, Sarah, the macro hasn't been entirely quiet this week because of what's gone on in yields, because you got like a third straight higher than anticipated inflation number, and we're rethinking the Fed path. So I think that's also what has investors hesitating and the average stock hesitating, even if tech is driving the overall market
tech
higher.
can only go up so much if yields are.
Well, that's not exactly what I'm getting at. It's much
I thought
more
you were
about
admitting that.
No, because it's not been true for a long time.
We're actually, it's not a coincidence that this week yields have run up on the back of 2 hotter inflation reports, and we're now at 2-month highs.
Yes, no, that's absolutely true. I just don't think it unusually, that affects tech. It actually affects small caps a lot more. It affects cyclicals a lot more, and consumer stuff.
By the way, Barclays wrote on this. More room to run, they say, fundamentally here, but the caution is that big tech is not a safe haven from macro de-risking. Major jumps in big tech S&P correlation occur around market sell-off.
Yeah, which is, and this is the idea that we've had this very, very helpful divergence, not only among sectors, but among stocks within sectors. And so the dispersion has been high. What that means is the overall index has a gentler ride. It doesn't cause a lot of volatility at the index level. When it's a macro shock, when it's really risk off, when people want to liquidate, when they want to reduce exposure across the board, then everything gets correlated and tech is not exempt. And I think that's the point Barclays is making.
Well, today, Adobe share is not exempt from downdraft as well this after earnings, and worth hitting at this point because I'm looking, the stock could be down as much as $67 from what had been $570. You're talking about a $260 billion company. You can see it there. It was the guidance, perhaps, that missed some of the street estimates, or maybe even more so some of the buy-side estimates. And then there's been this overriding fear, I guess you'd have to call it, of AI in general and the threat that it represents to Adobe's business. You remember the stock sold off pretty dramatically after the introduction of Sora. this new OpenAI program essentially that lets you create full motion video kind of things and the like. At the same time, you know, the bulls would say, listen, there's no sign as of yet that the lower cost competitors such as a Canva or even a Figma are really hurting overall growth. Even though they may be taking business away, there is also a thought that perhaps they're actually increasing the total addressable market by having people get into sort of this artistic side of things more cheaply and then move up in terms of what they're willing to use and pay the subscription fees of Adobe, for example, to use them. And Mike, you know, it trades at what you might call about 23 times 23 free cash flow.
Yeah.
Which, again, those who own the stock have said, I think that's pretty cheap. It's below, you know, roughly in line with Oracle. You're talking about 40% plus margins. And there is a hope that there's going to be an acceleration in the second half, and that is what Shantanu Narayan, the company's CEO, discussed on the call last night as well.
For sure. I just think the burden of proof is a little higher now for them to prove that that AI is an enhancement, not a real challenge. They're going to have to fight that battle for a while. The pricing issues maybe were more fleeting, but it does seem that that right now it does have that premium valuation. Now it had used to trade at, you know, well above this,
right,
in terms of free cash flow,
yeah,
multiples and things like that, because it just seems such an autopilot grower, and it's just like huge addressable market, massive subscription revenue growth, and I think it's just a little bit of, you know, a rethink of exactly how immune they're going to be to some of these.
They also addressed Sora, by the way, yesterday on the call, and the president saying they work with OpenAI, and he said we are obviously going to see us develop our own model, but it's all a tailwind. He said because the more people that generate video clips, the more they need to edit that content.
Right.
So that's how they address that.
Should mention as well, $25 billion buyback over some period of time, but that's, you know, 11% or so of the current market cap, or 10% of the current market cap, so not insignificant. All right, guys, I've been following, you know, Sarah, you've been all over the place this week, but I know you watch. I've been following this TikTok story very closely because it is fascinating to say the least in terms of where things stand and where they're going. Right now, of course, and I'm sure we'll hear over the course perhaps of the day from Emily Wilkins in D.C. in terms of where things stand in the Senate, how quickly a bill to ban TikTok in the United States there will be created. Will it be part of the appropriations bill? You know, you look for Maria Cantwell and Mark Warner from Virginia, Maria Cantwell from Washington to play a key role here, as well as Lisa Monaco from the DOJ, I'm told. But again, I'll defer to my colleagues in D.C. for the latest there. What I can tell you, though, is that, you know, the Journal reporting today, and I've been bringing up any number of times, the likelihood that the Chinese are not going to say, okay, ByteDance, you can sell this. And you can sell it along with, by the way, the algorithm and the source code. Now, you can make your own algorithm, but you need at least some time to be able to copy the source code. And I went back 3.5 years. I found my notes finally after a bit of a search from 3.5 years ago when we were going through all this. Back then it was about 10 million lines of code. Now I'm told it could be as much as 40 million lines of code. It could take a long time to conceivably to copy that code. That said, large language models apparently make it a bit easier and more possible. But the problem here is that while Steven Mnuchin may be interested in buying it, or perhaps there'll be some others out there that certainly might be, you're not gonna get a chance at this point to actually do so. And so we are left with the real possibility that if the Senate acts and passes the bill, and President Biden, as he said he would, signs it, and then there's some time period and there potentially is litigation nonetheless, that this actually could disappear in the United States, as hard as it seems to imagine. Because what you're buying without the source code or access to the source code is virtually impossible. Obviously, you'd like the algorithm as well. Steven Mnuchin addressed this on Squawk Box yesterday when he was asked about, well, what do you do if you don't actually get the technology? Take a listen.
Proposals they've blocked because they were not happy about the technology transfer. And I would have to convince them and the U.S. government that there was a way to do this.
And that continues to be a key question. You know, there's been some talk about Bobby Kotick as well, the former, of course, CEO of Activision being involved. You know, I think the sense, frankly, that I'm hearing is, sure, there was something to do. He was involved the last time 3.5 years ago, along with Oracle, along with Walmart, along with Microsoft, when they all sort of were thinking about what they could do here as a ban seemed potentially possible when we got that executive order from then President Trump to ban it. Not right now. I mean, there's nothing seemingly, Mnuchin may be out there and may be able to raise some money around it, but you got to actually have a deal that you can do. And so we'll keep a close eye on the Senate and how quickly this bill moves.
For sure. And, it's so interesting because I can't get away from the idea that this is all happening at a moment, arguably, when TikTok's financial growth rate and kind of cultural sway might be peaking.
Yeah.
This is the way these things tend to go.
It's very, of course, 170 million users here in the U.S. Still not profitable. Again, I've talked to any number of people now who say because they're spending so much money on Project Texas, which has been all about moving all the data to the Oracle servers in Texas. That costs a lot of money. That said, there's a belief that if the Chinese were to allow the technology transfer, the thing could be worth $100 billion. I mean, you're talking about something that could be generating, just from the ad business, at least $5 billion in operating income, let's call it, over 5 years from now. Put a multiple on that and figure it out. ByteDance itself, though, extremely valuable regardless, and there doesn't seem to be quite as much pushback this time from some of the owners of ByteDance around all this because they have such dominance, not dominance, but such a significant position in the Chinese market that's added so much value overall. And by the way, remember last time there was a ban, there was a talk, it was Australia, US, New Zealand, UK, it was all the English sort of speaking TikTok that would have been involved. That doesn't appear to be the case so far this time.
There's also the users and the influencers who make a lot of money, and the celebrities, and TikTok is waging a pretty active campaign getting them to call their senators right now and lobby against this. And I do wonder if we're going to continue to hear political opposition on things like First Amendment really heat up.
And of course, finally, the big beneficiary, if this were to happen, would have to be Meta.
Oh, yeah.
Without a doubt.
That's what President Trump says.
That's what President Trump says. And that seems to be
apparent. Vertical short video. They created Reels just for that. So.
The chief of staff of the president, Jeff Zients, was a board member of Meta's. Just saying. All right, coming up, the broader market versus mega caps. Countercore's Tony Dwyer is going to share his strategy as we reach the midpoint. It's the Ides of March, right? Let's walk on the street straight ahead.
Oh, with pullback. Double bottom on the SPY, it opened that stay. Okay, good morning. I'm drinking tea. Dadgummit, I don't get coffee.
Educator.com.
Some new data just out moments ago want to hit February industrial production, rising 0.1%. That was a little better than economists were expecting. They expected it to be unchanged. Capacity utilization, 78.3 compared to a forecast of 78.5%. All in all, I think we have seen better indications from manufacturing.
Oh, yeah?
That's been one of the harder parts
Well,
of the economy lately. Things are looking
Sarah?
up.
Things are looking up.
Things
Well,
are
they're
not looking up.
at least.
Okay. All right, let's
Not
talk.
as much on the consumer after retail sales.
Let's get back to the market. See if
They're
that's
looking
looking
up
We're
because
about
of
halfway through
fucking
the month.
manufacturing
The
are
S&P,
eating us
500
alive.
and the Nasdaq have both hit record highs. Canaccord Genuity's chief market strategist Tony Dwyer joins us now. Give us his take on.
Man, this is a really nice setup right now.
All right, so do
for
that, Tony.
opening up.
I don't know if you heard the data as well, but where do you stand in terms of how you see things unfolding from here over the next few months?
David, I think it's going to get. It's been choppy. It's
Choppy.
Gonna get choppy underneath the surface. I think one of the most important things that's not talked enough about. So much of the. I ask myself when I get up in the morning all the time.
She flat out
what is
lied
the
right there.
recession? I've been on a recession call for a while. You had an inversion of the yield curve that's been historic in terms of duration and extent. And bank lending last year shut down, over the last 15 months. So how have we not gone into a recession? Most people would think that, well, you have excess savings from the pandemic. You had
Okay. So within a day or two, panic sets in. I swear on the Bible, this market has been acting very irrational for the last 4 months straight. It's all in speculation. What I see around me is not good. Maybe what you see around you is. Inflation's not going down. It actually went up. 6 rate cuts, huh? I didn't fall for it the first day they started mumbling it. The market's telling us 6 rate cuts. That's a flat out lie. I got that from Fannie Willis. That's a flat out lie. I always have cash in my apartment. I got $50,000 in my refrigerator right now. Get ready to do my next drug deal. Well, it didn't hold. So we got the bottom wick, 511.83. So it's now or never. Good morning, Magnificent. Did I ever tell you that I love you? Good morning, Jesse. Here in Missouri, we have a gangster called Jesse James. My great-grandpa, Mr. Howard, the coward, shot him in the back. They call me James Howard the Fifth. Good morning, Yoko. Yoko made a good point yesterday. Now this market, I've been saying it, you got to be very careful with this market because we are at extreme greedy levels. And it's over extreme. This fantasy about EV cars and everybody going to be driving. I see more people using public transportation if that happens. People ain't going to want to go out and buy a $60,000 car and try to figure out where they can plug it in at when they can barely pay rent. It's a fantasy. I wish, sometimes I wish liberals weren't around. I used to be one, but they've just gotten AWOL. SPY, man, if it got healthy correction would be the 200 if we were ever even come close to it. And I think we broke a major support today. Yeah, so this thing can drop down to, we've got three different levels. One, Tibbets, and a freebie. So these are going to be our support when we go in here and buy the put. Bubbits. And that there is the nice one right there. 508. And number free. And if that don't hold, 507, then 503 is going to be probably the place where we run it back up on SPY. Resistance today will be the 21. I mean the 63 on the 4 hour time frame. Whoa. Hey. Let's see what that gives us on the 1 hour. Jimmy's curious. And right there, 512 something. Jim's freaking out. Where are you? There it is. 1 hour. Whoa. There's the head and shoulders right there. There could be a support there too. 510.55. So what kind of patterns do you look for in a choppy market? You use the standard deviation, you use the linear channel, or you use the megaphone. Here's a linear channel right here. So you put this on the 5 minute. Put it on the 30. Yeah, see, it'd be a pretty good sell-off. Oh, that's Tesla. Never mind. SPY. Yeah, see, we're getting close to that first support that I mentioned, and we hit the first one off that head and shoulders. So you got your right shoulder, left shoulder, right. I'm putting my number one pattern right now. I'm gonna go get my tea started. We got 3 minutes left. Yesterday I called the IWM out and really screwed that up. Watch your chips. We got Apple. Watch Apple here at open. McDonald's, I'm waiting for the 3-day rule. NVIDIA, Tesla, AMD, TSM, Adobe, Google, volume leaders. Google had a good day. It can pull back. This is what you got to, I don't want people getting stuck in trades. It's all about timing. So let's say you come in here yesterday, oh man, this looks like a beautiful chart, man. Oh yeah. And you're up what? We have some pretty good volatility in here, one, but you're up 7 days in a row. So think about that. Things have to consolidate. they hit their peaks and they consolidate. If you're looking to trade something related to Bitcoin, and all of a sudden you're up there at 72,000, close to a double top of an all-time high. Irrational exuberance from 15,000 all the way to 71, 72 in a few months. Always clean. Oh, here we go. See, I can't read this chart, so Jimmy's got to clean it up. Come on. What the fuck? I'm gonna place dip. I can't get it to. I can't get it to erase. Damn it. Wait up 3 minutes. Come on, you. Calm down. Just calm down. Calm down. There's a pivot point right there. That's your resistance. This is going to be your support, the 1, 2, 3. 5102 is where I see it's pulling back to. So watch, I'm looking at the put. Come on. Oh, no. Here, whoa, right here. $51.07.8 something. 51.0789 is my support, and resistance to break would be the gap fill at 51.3273. And I'm going to change this to 60 something. $61. So that's going to be my resistance. 51.32 to 51.07. Now I'm going to verify that with a 1 minute time frame. Oh, bingo. Bingo, perfect. Perfect. So we're going to look for a double bottom at open with a higher low, and that's going to be right here at 51.24 is where we want to. We want to come back and retouch this. Come on, you idiot. Here, let's rechange this. Get ready. Remove drawing. Get the alert set. There it is, right there, right there, right there. SPX. Oh God, I ain't set up. Damn it, there I go again. Mistake after mistake. Should have been set up. Come on. Okay, SPX. Today's the 15th. Oh, the SPY. I got SPX. 15. The 5160 strike. Now I'm far out of the money, so I can't dip much from here. I missed my freaking entry. Gotta wait. I mean, I had it right here. So I don't think we're going to come down and touch it again. So I'm going to try to get it just right here at 310. I don't think we're going to, there it goes. There it goes. Right about in here. That's where it's really got to start showing the mustard. Scalping Lotto, strike 5160 at $3, and I'm going to set a tight stop. If it doesn't hold this, I'm going to definitely get out and wait for a better price, because I'm not very bullish at all. I'm just taking advantage of this here price action. Someone messaged me yesterday. Price action's where it is. We want to get that first hour out of the way, and this is how you trade it. You can't take your eye off the ball until you're done with the trade, and then you go get your tea. Well, I already have it. We're at double bottom now. Triple bottom. Retesting the double. This is do or die here. No, I don't think it's going to work, because we can drop all the way down to 14 now. It's got to hold this wick. Could add, I got 3. I could add 3 more at 275. but it'd be my last support. I mean, this has to hold right here. See, now we're weak. Okay, let's wish me luck for the rebound. $270. Might not get it either. Break it. If we can build above this here trend line, I think we're going to be okay. I got 285, 6 contracts. So we're going to call this an inverse head and shoulders now. I can get out of this trade. We hit the 9. So if you're like in trouble, but I'm gonna hold on. I want to get it up here to the pivot point. We had 3 white soldiers right here yesterday. I don't know if that'll mean anything. We're at 340. I got to make a business decision. We broke the double top. Hallelujah. Glory, glory, hallelujah. I pledge allegiance to the United States, for which I stand, one nation, under God, indivisible, with liberty, and break the 21 EMA. Amen. Does anybody make a business decision? Jim, man, you're a daredevil. We're just amazed how you can do this. Now, if we hold up the 9, we can easily come back down again. But what would be really, what would have been cool if that would have stayed above the 9. You dirty rat. You were supposed to stay above the 9. How dare you? Okay. The crowd is going wild right now at the sports arena. We do have an inverse head and shoulders. Now, if this sucker respects this right shoulder line, we expect a little pull up to the upside and then another one. Now, hold on. We got maybe right here. We cannot dip below that line. Do you understand? We have just completed what I said we would. We do have an inverse head and shoulders now. Am I crazy enough to add 6 more contracts? No. I will if we break above the 9. The 9 is that blue line for you YouTubers. Now we're going to look at what's red. Volume leaders. Tesla, close to my, Tesla hit my support yesterday. Nvidia down 12 bucks, almost hit my support level. Uh-oh. Now I really start to worry here. 230. We could drop down farther. No, we don't want to do that. That's our next support, 51.20. Right here. Oh boy. So these 5160s are too far out of the money right now. So we want to move them up. The 5150s. I'm going to get back in this trade. I'd love to listen to these morons on CNBC today trying to talk themselves out of what they've done, what they've said in the past month, 2 months about interest rates and the Fed, especially this chick.
The biggest business lobby is suing. They've joined with 10 other Republican attorney generals across states against this rule. It has proved a very contentious rule. And you know who someone...
See, I see a blame game coming in pretty soon.
The FIA summit, we specifically discussed... First of all, we talked about Gary Gensler, who he made a joke was his bestie on Snapchat. And then I asked about this climate rule and what he had to say about it. Listen.
It sucks.
How well do you think the average company in the United States can actually measure that?
Not too well.
Okay, so are we doing this for the plaintiff's lawyers or are we doing this for investors? I'm just kind of curious.
Investors, the environment. But shouldn't they be able to measure it? Wouldn't that be responsible?
How about this? If you're going to go...
I know what he's getting ready to say.
On a...
Who do you think benefits the most with this climate change agenda? I'll give you a one-word example. And look it up. Lucinda. You'll find out that Nancy Pelosi's family was totally in charge of that whole debacle. Over $600 million wasted.
Less R&D in America. VC-backed firms that are public account for about 2/3 of all America's research and development budget.
So you see
this is still opportunity. Don't take me wrong on this here, SPX.
Ken Griffin really connecting
Still
the
good
dots
setup
there
here.
in terms of
We got a
what
megaphone.
it could mean for Americans, what it could mean for companies.
Jimmy said what patterns to watch for today. So we got a megaphone right here with a 1, 2, 3 bottom. Now if this support holds, we can shoot up to the top side of this megaphone. 10-4. So this is the SPX 5150s. Last one, 385 to 340. 440. I'm going to watch this one here real close. If this holds support.
We got 1-2 hotter inflation reports this week into a Fed meeting. Next week, will they change the dots? That's the big question. They predicted 3 this year last time.
Nope, didn't hold
But
it.
they take it down to 2.
All right, we'll be right back.
Okay, I'm still watching it. This could be a good spot. Let's go with the wicks here. Okay, Jim, make a business decision. This got down to 280. So I'm going to set an order in at 285, 290, 285. And we're going to do a megaphone. Jimmy said megaphone this morning before he even started looking at stuff. When I say make a business decision, there's a critical reason why I say it. Because of booyah. Should I get 320 or $3? Maybe 340 would be a good start right here. But if it gets one more candle down, I can get 320. This is a 51.50 strike for today. Lotto, SPX. There's 330. Come on. Damn it. 3. There's SPX, March 15. I'm trying to get 320 now, 340.
WTI today down
Might
for
be
the
too
day,
late.
but as you can see, month to date up over 3%.
Now the time is near. I'm waiting for my entry. 320, maybe 300. I was trying to whisper Okay, she's coming to me now. PLTR, Google. Let's see who's got the worst, the losers up here. Adobe. God, Adobe's down under 500. Put that on your watch list now. Here we go. Jimmy did it. We're back to my first support. Let's make a business decision, Jim. Come on. Just one more little candle here. Get ready. Come on, 310. First entry, 320. Could I have silence, please? Demonstrating the artifacts of a megaphone. We have a two-headed snake entry, 5150 strike, lotto. Jimmy called it out, said wait for the pullback. I want to get in at 320. We were at 360 at the time.
Amazon has been expanding into a new corner
Sarah,
of e-commerce,
that's very rude of
social
you.
media shopping. The company may stand to benefit if TikTok does indeed get banned.
Shut your mouth. So if you got in and at a cheap price, now I'm going to describe what's going to happen next. We have the 9 EMA and the 21 EMA. So Washboardjim's thinking we need to hold the 9 to stay bullish. Now we do have a higher low on the 1, 2, 3. 1, 2, higher low on the 3. So as long as you stay in between the 9 and the 21, you're squeezing. And now we're back down to 310. I'm down 30 bucks. Back to even. I should have grabbed 3 more at 310. That'd have been a smart move. Because that's what I wanted. I'm going to ask you a personal question. We have anybody in here from New York? I knew we had a horse shack in the crowd. Break it. I can hear the wind outside. Understand, the market's bearish right now. We can't wake up and think, okay, these dips are... We got to look at volatility and play within a channel. It's not like it has been for the past couple of months. You hear these... They don't want to admit it, but this PPI number wasn't what they wanted. Because it snaps everything they've said, that there's been an improvement on inflation when we're entered stagflation. You get stagflation when the government spends too much money. It's just no other way around it. It's when the prices of goods goes up and the prices of wages stag. I'm still waiting for this thing to do something. McDonald's had a little spike this morning. SPY looks like it could not hold support right here. Should have bought some more down there at 310. I think we're going. Well, that don't look good. Yep, there it dropped 275. I'm glad I didn't. Watch this. This ain't looking good. Well, it is too. Looking better than. Wow. I wasn't looking at the chart. I was looking at my price option. It went to 275. And I'm going, what the heck? And I looked at the chart. I said, man, that looks kind of bullish to me. I would have probably took that 275. Okay, I'm taking off my tennis shoes right now. As Washboardjim makes a business decision. You know what? If that chick didn't put that check in here, I'm gonna kill her. Confucius says, will we have a rebound the rest of the day? Confucius says. So he opens up the envelope. He wants to read the message, and it's difficult getting out of the envelope. Now, this is no Johnny Carson thing here. What's going on here? Never had so much problem in my life trying to pull out a hot check. There's the knife. Jimmy didn't feel too good about it. I was getting ready to say, knife coming. Now I got to get out of this sucker. We're still good. Barely. Now we got a fallen wedge. So that's bullish also. So don't count your chickens yet. I think we got a chance here still. I'm going to add on. Come on. There's 260. That's what I want. There it is. $250.
A little bit softer on the consumer sentiment front. Look, these numbers have been tied in part to gas prices, which have risen again. Oil is back at $80 a barrel, and that has been a theme, David, all week long in the inflation
260.
numbers. You know, we got CPI earlier this week. It was firm, as the market expected, and then PPI.
The market did not expect it.
Wholesale level. Yes.
You liar.
Energy prices are part of the problem here, but we also saw a pickup in trends, say, from goods prices, which were deflating, not happening as much anymore. So where are we now? The chart that I made.
Where are we now,
Where are
Sarah?
we now, right? Into a Fed meeting. What are they going to say about it? What should investors think about it? Here is, we know they watch core CPI, taking out food and energy, and we know they watch the annualized numbers to smooth it all out. So the orange line is the year-over-year prices, and obviously they have come down sharply, right? They're not at the 2% where the Fed wants to see it, but then core annualized.
I can't take her too much longer.
Which just smooths it out a little bit on the blue line. You see the little tick up for where we're going, so that's not good. Fed doesn't want to see it, but the trend is still intact. And so this is what the Fed is going to be debating. With the trend intact, but the numbers being a little firmer, what should we signal about rate cuts? Because this Fed has already begun signaling rate cuts are coming. So do they keep their game plan, or do they find a way to tell the market that we're going to have to be even more patient? And one way they could do that is, so there's the dot plot. And they always say,
Looks to me like I'm going to have take a loss.
The dot plot's going to be the only trade.
But I like this falling wedge.
At the Fed, besides
But she's
what
totally
Secretary Powell
wrong.
says. So last time.
I don't even want to listen to her. This market can sink a lot more because it ain't what they're looking for. And she said the market expected the numbers to be like, that's not true. I can't listen to her because she's going to make you fall into that line. Well, that didn't work. 5107. Watch us see it. The 5100 puts look nice. Don't fight the internals. Yep, I understand. Very negative. I gotta get my way out of this bag. I'm gonna be locked in with a lot of contracts here. No, she's totally wrong. I don't even want to listen to her today because she's looking for excuses. And that last one was a lie. Expected. The market did not expect it. NVIDIA hit the 200 today. That's what I called out on NVIDIA to bounce off the 200. That'd have been a good trade this morning. Oh, beautiful. I mean, right to it. I would have took that one, run it back to the 200 on the 1 minute. Let's see here. I got a Vegas. Anybody
is
stuck in any trades, let me
Governor
know,
Wade
private
has
message.
to sort of hike before the Fed.
If anybody's stuck in a trade, let me know, private message. Jim will reimburse you any losses today. Woo! I got to get out of my loss here. Right now it's looking good. If we break the falling wedge, exit idea will be the 51 and the 63 EMA. 10-4? Yes or no? Affirmative. So I didn't sell. I don't want to take a loss. The average is 290. Washboard Jim, is it true that you lost your virginity when you were 45? Through 20. Life goes on, and Sarah, shut your mouth. $350. You can make a business decision now. Anybody take the SPX with Bobo and it's not green and sold at a loss? Spank. Falling wedge. Megaphone turned into a falling wedge. Megaphone turned into a falling wedge. Have you ever had a wedgie? Yoko, have you ever had a wedgie before? Subway, have you ever had a wedgie? When you was 5? Oh, that was a good one. I heard there was a guy named Mike runs around New York giving wedgies. Affirmative. Come on, there it gets. Okay, get ready. Make a business decision. And you see the other one, the megaphone. We could still come up here and close at 5132.73, Mike. And magnificent. Oh, Randy's got a resistance to break here. 5121.42. Nice candle on Carvana. I can make a business decision. Randy, have you ever had a wedgie? There it is. Business decision's been made. Scale out. We can go higher. I'm telling you. But if you're making a business decision and you need to go to the bank, or you had to go pick up the kids or go cheat on your wife, Jim, you shouldn't be encouraging that kind of behavior. $4, there it is. By God, I'm taking it. And there's not a thing you can do about it. Do you know how much money I just made? I'm going to make a point, and I want you all to listen very closely. So we identified, I walked you all the way through this trade. I held on, I bought the dip, and I recognized two patterns, a megaphone and a falling wedge. So I took the trade off the megaphone thinking we were going to bounce right here. And we went up a little bit, and then we pulled back, and I was down a good, what, $60. I was down farther than that. It got down to 2. So I went ahead and held on. I could have bought more. I should have bought more. I wanted to buy more, but I just said no. I'll go with what I got because I got too much wrapped up in it already, under $2,000. So my average $290. So I recognized a wedge. We started to form a wedge out of that megaphone. And that even got me more bullish. That means the market's starting to turn maybe to a positive push. And then you run it up to the 63. So when I got in the second, I wanted to take it to the top of the channel. But once we formed the wedge, I said I'm going to take it to the 51 or the 63 EMA. And by that time, this thing jumped from 290 or $2 all the way to 4. And once I hit that target, I pushed the button right then. I didn't hesitate. I was probably the first one out of that trade. Using the 65 EMA. And if you notice, I was kind of rocking back and forth when I talked right there. I used to box. So boxers have a tendency of rocking. And I used to play music. And they have a tendency of rolling. So I come up with a phrase of rock and roll, baby. I am the reincarnation of Elvis. And the entries was the hammer and the crow. Well, not the crow. It's right here. I should have bought more. I wanted to buy more on the crow. Tweezer bottom. See, I'm done. That's all I had to do, and what? It's not even been an hour yet. And I trade this SPX every single day. And I'm looking for a pattern. I won't take the trade until I see a pattern. If it's not a candlestick pattern at open, or a wedge, or an inverse head shoulders, or triple bottom, or double bottom. Wedgie day. Who has not had a wedgie? And I'll personally fly to your residence and give you one. Randy, have you ever had a wedgie? Oh, you married her. Woo! Okay, I'm going to come visit you, Ocean. Show you what real life's all about. Once you form a wedgie, you start to grow hair on your balls. Anybody on YouTube take that trade? Happy Friday. So some of you might not know this, but when I named this strategy 3 years ago, I named it after Tom T. Hall, Sneaky Snake. And I think it was a week later, he passed away. So I'll never, ever, it'll always be, no matter what I do in life, trading, I will never change the name. I've had 4 or 5, but from Washstock Watch to Washstock Talk to the Singing Day Trader to Washboardjim to Sexy. But I'll always have Sneaky Snake.
A certain amount of internal combustion engines, which will be used for collector's items, etc. But it's going to happen. And I think the thing along the way, David, is what is going to happen to all the startups that have, started over the last couple of years?
Merge.
Because
they'll merge.
This longer path, a number of them are going to get into real financial trouble. And you're seeing that play out right now.
Now listen to what he just said.
Just about
I know this for a fact. When you start to see an economy turn around and you go into a new sector like the automobile, anything, any kind of industry, cannabis, Bitcoin, you start having companies fail. Now, the ones that are established will try to buy some of these out, which means you could be seeing a turn to the positive in an economy. But it happens every time. People want to be number one, and only 4 or 5 survive, and you'll hear a lot of merging and a lot of bankruptcies, and then you'll know that the economy is about to the point of turning. But that's something that he just mentioned there, and I know that for a fact.
On EVs are higher than existing ones, and this is all overlaid. I mean, you were talking earlier in the hour about consumers moderating and looking at the environment we're in. We're in a very different economic environment, a more stressed environment with higher interest rates, and that suppresses the whole market. And that's why Tesla, for example, is going from a golden era where they literally had no competition and very favorable market environment to a really challenging era now where they have competitors and a less than favorable.
But bullshit.
That some of the pure EV makers, not Tesla, may face as a result of this transition stretching out over a longer period. Does that mean the Rivians and...
I can't take CNBC today. They think too much like liberals. So here's NVIDIA. Called this one out first thing this morning. You all got to have this on your watch list. Do you see what I see when Jimmy called it out this morning? Say yes. Look at all these long-legged dojis. And it looked to me like the Bulls were winning over the Bears. So we started to fine-tune. We came back and created a head. You're right. Inverse head and shoulders. So it takes one line. So I'm coming. Jim. Hello? Yeah, Jim. Check out NVIDIA. We just pulled back and created a right shoulder. Take trade. Run it up to the 200 and exit. Jim, we came back. We created another right shoulder off the trend line. Take the trade. Jim, we're at a double top. What to do? Sell it. I'm still in my first trade, Jim. I went and took a shit and came back and the thing dipped on me. Don't worry about it. You're at the right shoulder. If you want to, add on. Man, Jim, you just made me $5,000 on that trade for telling me to stay in it because we hit that right shoulder on that inverse head and shoulders right there. Also, Jim, I want to thank you because you said to watch out for megaphone patterns today, and you were spot on. Because I took this megaphone off this head and shoulders, and I run it up to the 1, 2, 3, and got out of the trade at the tweezer top. You're a genius. Expansion pattern. If you can count to 3, you can trade with me. Go, baby. NVIDIA calls are now. Platform. What did you do here? Come on. There we go. Great. You can make a business decision if you wanted to. Spies at the VWAP. The video. Yo. $1,000 strike on NVIDIA. AMD, double bottom, right it open. Would have been a good idea. AMD. It's only about chart patterns. I was insulted this morning by a woman that was on CNBC. She bashed technical traders. Snake, breakout, pull back, higher low, boom, meta. A lot of red on the cheat sheet today. Today's winners is AMD, Toll Brothers, Kroger. All my top percentage gainers on the watch list. And then the Tony and Jim watch list. We got Mr. on here, which I think corrected already. So here's, like, for example, you know, Mr.'s on my watch list. Setting up for a rising wedge. We got TSM on here that's had a huge breakout. Put this on the 30-minute, 1 hour, 20 day. So we broke below my 200 now. So that's what I alerted on the video, that we had to pull back to the 200. So we got a double bottom. Oh, we got a trend line here. We got a triple bottom right here. Actually, that's a pure triple bottom. We're not low enough yet. We got to pull back a little bit more and hit the triple bottom. Somewhere right around there. 133.88. So I'm going to set an alert for the triple bottom on TSM. And I'm going to type that in here. A higher low. TRI, triple bottom. You got to make sure you put your note in there while you're taking the trade or while you're looking at it. And that'll set me up. It's a pretty good little spot, actually. Got a gap fill right here, 2 of them. I kind of like this. Gap fill, resistance to break, 137.94. Yeah, I got a TSM on watch. This is a real nice setup. 5-day rule. We're down $22 in 5 days. Nailed this one here. Nailed SPX. Magnificent. I think you can go ahead and grade me now. Franchise, you want to give me a grade? AMD, I mentioned it. A plus. I mentioned it. There was a guy that come in the room this morning. Now, I wasn't familiar with his name, but I want everybody to read. Yesterday I kept saying quad witching, quad witching, quad witching, quad witching. So, this morning, what happened this morning in the room? Yeah. This gentleman right here. Quad witching. So one of our traders this morning traders. First of all, it's a triple witching day. Stock options, stock index futures, and stock index options contracts expire today. Automatically, everyone thinks this means something bearish. It doesn't. What it means is that the intraday volatility could cause irregular price action, which we saw today, especially as the market tries to pin price towards the end of the day and a wave of options are exercised. On days like today, I prefer catching the pre-market move, which I did, before the option market short starts, which I did not. But needless to say, today is not the day to test out new strategies with heavy sizing. If you trade anything today, go light. But it is a day to exercise a new strategy because it's quad witching. You want to understand what this week brings to the market. Why people had difficult yesterday. People were getting out of their contracts and going into new ones. Some people just trade this and that's it. They're done. They walk away, they come back in 3 months, and they reorganize. So I appreciate that information. That was a real good insight. See, I get more cautious. I know that volatility can happen during this week. So when I have a real good, oh my God, what happened here? We're at 410 right now. Can anybody tell me where the SPY's going to, Randy? Top of the blowhorn on SPX. Do I not mess around? These things are at 11:30 right now. Washboardjim called these out at 260. No, These weren't the right ones. These are different ones. Oh, I'm looking at the wrong contract. Never mind. I'm looking at... I'm looking at NVIDIA. Never mind. Let's see, what? They went to 1100? I was going to have a happy dance. Does anybody know what happy dance is?
Baggy Bundles is an incredible deal. I got this. La gente está pidiendo el 2 for 3 cada 2 por 3 con un sausage biscuit y un café mediano. O con small seasoned potato, egg and cheese biscuit, cada cuánto?
I don't understand a word you're saying, so shut up.
Elige bien, elige el 2 for 3 Diggy Bundles de Wendy's.
Is that on?
It might seem crazy what I'm about to say. Sunshine, she's here, you can take a break. I'm a hot air balloon, I could go to space. With the air, like I don't care, baby, by the way.
Because I'm happy, man.
Because I'm happy. Clap along if you feel
I just made a killer trade.
because I'm happy. Clap along if you feel like happiness is the truth. Because I'm happy. Clap along if you know what
Boo boo, baby. Resistance, Jim called it 51.3273, Randy. Out of the trade. Nailed it. Nailed it. Nailed it. Magnificent. Mannequin. Did you take AMD off Bobo's alert? Nailed it. Ladies and gentlemen, I think I will go to the beach. And today, anybody comes up to me and says, Jim, you have nice boobies, you'll get a free margarita.
And valuations in a much broader way than just the Magnificent 7 or 6, and investors aren't pricing that in? Is that the thesis?
Yes, 100%. So, you know, we make the analogy of studying technology diffusion and looking at the winners of the internet. The winners of the internet were not the infrastructure enablers, right? Ultimately, the winners of the internet were those who adopted it.
God, I can't stand you today.
I guess like it's stable as far as like global, like this recognized brand, sure, I'll give them that. Yeah. And for shoes. I mean, like if you're a shoe lover, this is like pretty much the cream of the crop. So I get that. And I'm speaking more of like an athleisure comparison, but hey, the chart doesn't look great either. So chart obviously agrees with me, but we saw shares sold off hard on December 22nd after they reported revenue that was up just 1% year over year, but that marked the fourth straight quarter of decelerating growth for Nike. They also cut their revenue outlook for the full year, and they announced plans to cut costs by about $2 billion over the next 3 years. So investors were seeing overall that this name continues to see inventories. I mean, like they're shrinking, but still remain elevated. Revenue from China did move up about 4% last quarter to around 1.9 billion, but that was still below what had been expected by the street. So with now results out next week, next Thursday after the closing bell, adjusted profit is expected to drop another 12% year over year. Revenue is expected to fall 1%. So still seeing contracting sales growth. I mean, like nothing to get you excited about this report, but maybe what excites you at this point is the bar is so low that any degree of optimism could be received really well.
You could also be excited about some fresh new Jordans.
You know what, that too. We could be excited about some new Lululemon.
Right. I remind them watching the Steadicam Roberts outfit here, getting ideas on what to talk about. Nike shares, how we doing, Rick?
Well, not great here. Ever since our last earnings event, a lot of ways our chart kind of begins here. For
Woo! Not great here, he says.
The earnings event here with resistance at our post-earnings highs near 110.80. So that would be one key area to watch here. But sloping downward, we've fallen below all three of our moving averages. They're all trending downward here. The trend is more geared toward the downside. RSI, we can see as well a longer-term downward slope here with our trend line below the 50 midline as well. So once again, more biased toward the downside based on our indicators. We held some old lows though. We had a trial there and we held on near that area near 98 or so. So that's a key area to watch if we do break through there. We've got our lower end of our channel. We've also got these post-gap lows here from a gap up that we established near like 95 or so. To the upside, our moving averages, our trend line, but ultimately this area right here is the mark to beat near 111.
Okay. All right. So if it can break out, then it still has a little bit more resistance ahead to get through. Tough chart for Nike. Seems like in the short term, without a whole lot of upside momentum to get through that resistance. So challenging for sure. All right, I guess Lulu kind of does look like the winner out of the three for next week. Thanks, Rick and Jenny. Coming up ahead of our market meetup, we'll give you the latest on the Boeing saga as some of its customers now are looking for new suppliers, perhaps overdue for Airbus to catch a little bit more market share. We'll give you the update there. Russell firming up, NASDAQ too, NVIDIA's positive.
Well, I've thought about this for a couple of days.
Day two, we're getting ready for you.
I thought about this for a couple of days, and I hope Jake gets his knock blocked off. Because I am an ex-boxer, and to go after an old man like this, I mean, he's still, he'll whip his ass. Jake does not have a chance with this man. No matter if 20 years from now, if Jake fought him, and he was 80, he still wouldn't have a chance. So, yeah, everybody's going to look at Jake after, I mean, it's all about money. He knows he's going to take a punch. But I think he's done. His boxing career will be over after this fight. If anybody, he'll probably have more people wanting to go after him. Megaphone, Randy. It's an exhibition. That even makes it worse. Megaphone, Jim called this. Now I want an A, and I want a free trip to Mexico. Do you hear me? I want you people to get together and rally up a couple grand and send me off to Mexico. Look at that. When you hang out with a mega everything great again. Megaphone. I mean, this is beautiful. And the rest can come up with a free trip. Woo! Esther? Nailed it. God. Right. Reddy's just joking. That's why I don't charge. Right? People that charge don't make money. Such a pretty world today. I made the megaphone. They're still in shock. You bastards. Stock twits. I can't believe I got kicked out of Stock Twits because I made fun of somebody. Probably somebody I shouldn't have. But that's all right. When you become rich, you get a little cocky. Jimmy nailed megaphone. Nailed it. Well, I'm going to go get my water ready. I mean, this is really, I don't know, it seems like I hit another plateau today.
cycle coming down the pike. We get into the September rate cut, and then I think that we could run into problems with all of that. The market, in my opinion, and the way that I'm seeing it here, they're just discounting less and less the importance of those economic datas, and are continuing to trade on other fundamentals and things of that nature. So, we've been saying we'll see how it goes, and we will continue to see how it goes, but this is things are changing a little bit here.
The numbers today were pretty neutral in terms of the data, as you mentioned, Alex, with sentiment. So to the point of kind of the vacuum of information, feels like there's a good chance we could close pretty strong into the weekend, given the treasuries are pretty calm,
It's just a
dollar's
beautiful,
pretty calm.
beautiful trade.
None of that gamma stuff.
I can't stop looking at it.
Yeah, I mean, we had sort of been rising in this wedge kind of pattern to pull some technicals. We did break below that, if you look at it. So I don't have a chart or anything to show you, but
coffee on the technicals.
If you don't have a chart, then don't talk about it. You understand?
Big catalyst, of course, we know. But the market's largely taken kind of the reflation narrative in stride. But I do think that we've discounted.
Okay, I'm going to step back for a second and kind of regroup.
It's almost been like a sleight of hand. We saw all these.
I just feel like if I make too many trades today, I'm going to make a huge mistake.
That was better than the kind of week expected. But all the revisions have made them bad numbers.
I mean, when you're having a good day, I could keep going on. I used to go to the dog track every Friday night. I lived in West Memphis, and when I lived in Springfield, I go out there every year with my dog. So I played trifectas every night, every Friday. I go in there with $20, and that would give me at least 7 plays if I boxed them, the 3 dogs. So there'd be every once in a while where I'd go in there and I'd just one after another, nail it. And it only happens every 60 days. And the same thing with the market. If I can just let you understand that there's days that you do not need to be trading, that it's best to just sit back and do your homework and wait for that big day. We have, the POW week, and the volatility, the PPI and the CPI, and just a lot of data coming out, which would make you a little leery. But if you can migrate a strategy where you just trade a couple days of the week and not have to do it every day, but be here every day, so you can be in the now. And you know when the dip is pulled back. And it only takes a good couple trades a week to make $2 or $3 grand. Yeah.
$12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture, everything.
I love you.
Comes full circle on Trading 360.
I think you're a woman. So we've nailed the megaphone resistance, and if you can count to 3, you can trade with me. And look at this. I'm going to clean this up. Well, look at here. Jimmy just falling wedge. Do you see what else I see in this pattern? I'm going to show you something. Time to education. Grab your pencil and paper. Okay. So right out of the gate, Jimmy recognized a megaphone pattern. And then he recognized a falling wedge, which made me more bullish that we were getting ready to squeeze. And then he recognized an inverse head and shoulders. There's your head, left shoulder, right shoulder. So Jimmy called breakout before it even happened. We broke out with 3 white soldiers, which tells you what? A continuation. So you come in, Jim, we just broke out of the wedge and we have 3 white soldiers. What should I do? Well, you're real close to that next moving average, so I'd wait and see what happens once you hit the 63. Okay, I'll do that. And then she pulls back. A higher low off the right shoulder. Hits the 21. Boom, to the 200 out of the trade. So in this pattern, we recognized the megaphone, so we were in play. We recognized the falling wedge next. Then we recognized the inverse head and shoulders. Breakout, pull back to the right shoulder. Boom, to the 200 SMA. Perfect. So recognizing these 3 patterns, then you got a diamond right here, diamond shaped pattern, holding up the 21 with higher lows, counting with the 1, 2, 3, boom, to the 200, hitting the 1, 2, 3 out of the trade. Now where's it going to pull back to? You want to look for a pivot point inside of this megaphone. That's what you want to use as a support, a megaphone. It's the megaphone channel is right in here, the support level. So you take the top of this candle right here, and that's your pivot point with a triple top right here, 1, 2, 3. So inside this channel is your support level. And that's called a pivot point inside of the megaphone. So you set your alert on top of that channel right here to prepare to take the trade. And something could come, I mean, something could come up with the news, but a triple top break, we'll come back and hit that triple top for support and hold it. And if we hold it, we'll come up and break this here mega. Oh, who's this?
Its last
What'd
report,
she do to
it's
her
been
hair?
Slowly trying to make
Oh, God.
basically this new trend. So we've been in this relative uptrend that we're just
Oh, that's the
completely
other
breaking
girl,
down
okay.
today. Shares are sliding now below the 50-day moving average. I mean, we're still well off the 200-day. We've still been in a pretty nice uptrend. We're still up 9% this year.
This
But
girl
down
dresses funny.
5.5%, like you said, pacing for its largest percentage decrease on the session since May of 2023. Analysts are coming in today, lowering a lot of their price targets, but there's also still some price target hikes. I mean, I wouldn't say it's necessarily been completely pessimistic among those that are covering Alta here. Overall, they highlighted that there continues to be a resiliency in consumers when spending on makeup, because this is not seen as necessarily something that's frivolous. It's more of a necessity to those that are obviously interested in skincare and makeup, this market. But they even highlight this, that the beauty industry is getting more competitive. They do plan to expand to Mexico next year. They said international growth remains strong, but then again, markdowns on beauty products were more aggressive than last year. They also said that overall.
Okay. Before she speaks again, I do want to say that this stock from $368 all the way to $574 in less than 5 months. Irrational exuberance. Support right around 486.16. I was going to say, if your hair looked like that, I'd be very pissed off. If you were my woman.
Backing off S&P and the NASDAQ, as you said. But we've had quite a run already this year, 8%, 10%, and some of the momentum names up more in the mid-teens. So you've really already had a full year's worth of average returns in a couple of months here. And I think that that's making people nervous, and the momentum trade itself. Some of these
looks like that
are up
guy
on
that does
polls.
Biden on
And I think the
Gutfeld.
riskiest parts of the market, as you said, is the guidance, but also just the fact that a stock has been up and as strong as it is. People are taking profits and looking for other areas where they can find a good story that is going to be growing, but that hasn't had quite the run of some of these other bigger names.
Yeah, and I mean, an example of that would be some of these names in the Magnificent Seven, names like Apple and Tesla that have really sold off. And, we've had on guests who say, look, I still like those for the long term. I mean, Apple in particular, because of its big picture story and its ecosystem. And so saying that there is opportunity. I mean, when things sell off, do you find that there's opportunity? Do you have some examples?
Well, there is opportunity when things sell off, and the most difficult thing is really understanding about the underlying fundamentals, what's driving those, and trying to put some sort of a timeline on when that is going to improve. So, but you mentioned cap.
That's where they come up with the terminology: buy at support, sell at resistance. You know what? I think I'm going to raise my support level above this channel here. I might have got a little ahead of myself down here. Right there. On ULTA. ULTA. 497.69. I rest my case. Triple top break. Pull back to the triple top break. Jimmy, the room wants to know why you haven't looked at Tesla yet. That's a good question. It's my leading volume. That's why we're waiting for the next support at 153.70. We do have a nice little flag here. Spies pulled back to support. Ladies and gentlemen, Jimmy said we'd pull back. What'd he say? Let's go over this. Damn, you're so good today. I cannot believe how magnificent you are today, James. So Jimmy said we're going to pull back to the pivot point on the SPX. If you observe the screen to the right, or you YouTubers, I rest my case. I rest my case. Tonight, why did you meet me here all alone? I searched the world over and thought I found true love. Okay. Story time with Washboardjim. As this guy talks about his dad, who's one of the biggest con artists in America. This morning I went to go do one of my jobs, and I opened up the door, and the alarm system wouldn't accept my code. So I'm freaking out. I've got this thing blurring in my head. Beep, beep. And I call up the people that are in charge of the alarm, and I ask them, I said, man, I can't get... Well, they came in yesterday and changed all the codes. I said, what? So I sat around here and I called him back. I said, man, I can't get a hold... The guy hasn't called me yet about this alarm system. This thing's driving me nuts. It's been on for a half hour. And so finally I get a call. I said, can you message this guy and tell him that I need help? So I get a call. By this time, I'm standing outside, and all of a sudden the cops show up. I said, oh boy. So I'm on the phone with the security guy, and the cops show up. I tell them what I am, what I'm doing here. That was 35 minutes after the alarm went off. I said, I can't get these things shut off. It's blacking out on me now. So I'm staying on the phone and I'm looking in the utility room for this box to reboot it. And I don't know what I'm doing. And I look around the utility room. I couldn't find it. I said, I can't see it. And I finally look up at the ceiling. There it is, sitting on the ceiling. So there's a ladder in front of it. So I knew they were working on something. I climbed the ladder and I plugged the battery. He said, well, there's another plug in. I said, I don't see one. I see the wires going into the wall. And there were some tables covering up where they plugged in the thing, where the wires come out of the wall and they plug it in. So I see that. I said, oh, here it is. And I unplug it. And I run back up there to see if all the electricity's off of it. And it is. And I plug it back in and I go back up and rebooted and put in my new password. Or use my new password that they got. But this went on for 45 freaking minutes this morning. And it's just driving me crazy. The cop says, I said, I got my apron on, you know, I got my vacuum cleaner here and my towels, and he still questioned me. So I spent an hour today fiddling around with that. Fuck. What an idiot. Triple top linear channel on NVIDIA. Triple top linear channel on NVIDIA. Triple top linear channel on NVIDIA. Megaphone breakout booyah. Triple top mama yay. Triple top booyah. Back to the mega. Puts. Triple top baby mama yay. Triple top megaphone. Inverse head and shoulders. Oh, I'm supposed to go pick up that shit. Pick up that paperwork. Inverse. So if you don't have a strategy and you're not winning, I want you to paper trade. I don't want you losing money. If you can't recognize being in the now, what's going on in the market. Linear channel. Jimmy called a double bottom on AMD this morning. Exit idea has been issued. Double bottom. Do you understand me? Say yes. Jimmy called support and resistance. Learn the chart patterns. If you don't, you're just blowing in the wind. Buy it support, sell it resistance. Time for lunch. And what will it be today, James? It could be some soup. It could be another one of them lovely grilled cheese sandwiches. Or it could be a TV dinner. It could be a piece of toast. Come on, Marvel. Okay, I'm gonna go get my lunch ready and take a little break. Now, this week's been about time and being in the now. I want everybody that sits here all day long develop a time pattern, divide up a strategy within that 8 hours. Mine, the beach trade at open, the 11 o'clock break where I do my homework, 1:30 when lunch break is over and the fat cats return to work, power hour, and I shut things down when the bell rings. Because I spend from 3 a.m. to 3 p.m. or 4 a.m. to 4 p.m., 12 hours a day, studying stocks for 20 years. To come to the understanding that you don't fight the trend and you get out at your exit ideas and you learn how to trade on your own, not follow anybody else. Take their alerts, but your strategy has to be from within or you'll never be successful.
Right now, there's no other place to rotate to. I think they're going to rotate towards gold. I think there's a great upside breakout that's occurred. I think there's going to be some more lift in here. I'm going to go all the way out to the June 21st expiration. Ample time in here because it's a big spread. I'm going to be buying the 205s, again, buying the 205 calls, selling the 215 calls. So a nice big $10 wide spread out of the money. It's a $2.45 debit, but you have months for this thing to explode to the upside.
Get spy on
Okay,
here.
so you have some time for this trade. Ben, your thoughts on the technicals?
Yeah, I definitely support the bullish narrative here. It
5
looks
minute
like
man.
They're in charge, and I'm seeing this across multiple time frames. Just recently had a breakout. This has been 2 steps forward, 1 step back type trade, much like we've seen in terms of the indices. Let's get first and foremost
GLD.
into the 2 phases of development that I look
Descending
for in terms of price
triangle.
activity, which is also supportive of that bullish narrative. We're seeing that
Rising
play out. This is almost
wedge.
an identical pattern of the other 2 names that we looked at here today, where you get that high conviction up and then you get that sideways consolidation here. Let me show you what my eye was drawn to initially as I looked at this
Spy
chart
ain't done
here.
much
We're
today.
Pulling up again a 60-minute candle chart
back to
here,
the
and
right shoulder.
I saw 2 areas, right? Just kind of as I step back here, 188 and then 201. But I actually looked a little bit closer and I noticed that this pattern that we're looking at repeated itself multiple times along the way up here. Again, we're talking
Liar.
high conviction to the upside, sideways consolidation. So basically bullish positioning repeating itself in that staircase type pattern over and over again, solidifying the working assumption that we are trending higher. Take a step back with me on shares of GLD. You're going to see we're going all the way back to April of 2018 here, when we were balancing around 120. Similar pattern plays out, right? High conviction to the upside, sideways consolidation, balancing around 175, and then just bring your eye back to the left here a little bit. You're going to see one more time where if you really wanted to pull out that fine-tooth comb, you can see this pattern repeat itself on a more granular basis a couple times, and then look, it appears as if we now entered into
Double
that
bottom on
phase here
CRM.
once again, where what are the bulls going to look for? High conviction.
I just don't like this guy. I like him, but I mean, I don't dislike him. I just don't. His charting scares me. Something I'm not used to. Breaking it down and I don't know. Can't figure out how he's coming up with these support levels. Pivot points is the only thing I can see. Each one of these is a pivot point. That's a double top breakout. pulled back. That's a pivot point, and that other one's a pivot point.
Triple witching Friday, trillions of dollars of options expired.
Triple witching Friday.
You feel some volatility starting to break through, and I think the Fed meeting next week is going to spark significantly more of it. Look for, again, what I would term significant change, not necessarily leadership per se, out of big technology and some sell-side activity, a little bit of a pullback in the marketplace here in the near term.
Yeah, good point about the triple witching, too. Good to see you both. Thank you so much, Dom Kaufman, VO Trade, Ben Lichtenstein there on the charts. Thank you both. Coming up next, Ross Gerber is standing by. He'll discuss what is standing out to him in today's market. And of course, we'll circle back on Tesla. We'll be right back.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you are with us. And joining me is a very special guest. Ross Gerber is with us, President and CEO, Gerber Kawasaki Wealth and Investment Management. Good to see you, Ross Gerber. I haven't seen you in some time. Are you feeling bullish, bearish, cautious? I mean, how are you feeling?
No, I'm feeling really bullish. This is as good as it gets, you know? I mean, we've been waiting for a long time for the Fed to stop destroying business, and now, despite all the attempts that the Fed has made to destroy the economy, it's managed to keep going strong. So, you know, it's really kind of the best of all worlds right now, with giving the Fed the ability to not have to lower interest rates because they have to. You know, that's actually great news. So a 3% growth rate in the economy and a 3% inflation rate is actually a great economy. You know, what's there not to like? We expect good earnings in Q1. You know, it's not a super too hot economy, but it's certainly not too cold either.
All right, so that certainly sounds like a take, and that's good synopsis overall. I'd love to hear about some of the names that you're talking about today. I got to talk about Tesla, the worst performer in the S&P 500 this year, or among the worst performers, down 35%. And I'd love to hear your insight. I know you have talked, I guess, with Elon Musk at some point. It's a name that you liked. He's certainly smart and a visionary, but the questions are, is he distracted? Is AI going somewhere other than Tesla? And that was part of the value of Tesla, was the AI story, and is he going to separate that? We saw the launch. I saw the launch yesterday of the rocket, or maybe it's the day before. I mean, that was exciting. What's the big picture on Tesla? It's at 163 today.
Yeah, I mean, I think the big picture, which you kind of summed up pretty well, is that, you know, a lot of things I've been saying over the last 6-7 months have finally come to fruition. I've been warning investors in Tesla for a long time about the fact that Elon Musk's lack of focus and his political stances in support of white supremacy and other very, very controversial, if not just basically wrong ideas,
Who's this idiot?
you know, is really turned off a core demo
This
of
guy is a
consumers for Tesla
fuck up.
that's hurt demand here in the United States. On top of, you know, incredible levels of...
You're an idiot. Bringing white supremacy up with Elon. If you don't think like a liberal, you're a racist. Hurry up and get over with it. I don't even want to look at you. That peeps me up. Man, I was in the kitchen. I heard him say that. I said, I'm getting rid of this idiot. He got my right cheek twitching. That's not good. The guy, they'd be sitting down at the ring corner and say, look at Jim's cheek. That right cheek's twitching. You better watch out. You get ready to knock him out. Dolby fell some more here. This is going to be a nice 3-day play right now. This is off earnings. So we got to digest the earnings here. Probably somebody will talk about it. Is that idiot off here yet? No. I don't even know what he has to say. I don't want to hear it. I'd smack him right between the nose. Looks like somebody already has. It's been broke before. Somebody hit him pretty good on this side of the face, because look how much higher it is compared to that right eyebrow. Somebody smacked him good. Oh, and he's got instruments. Oh, that even makes it worse. He is a liberal. Gummit. Uber's had a 2-week correction with 1 rebound, pretty steep, nice little triple top with a falling wedge. So we can fall at 76. Here, let's put an alert on this trade. I'm going to show you how to alert this up. So you're getting close to, you're on a 20-day time frame. You see this here dip right here, it looks like a nice little head. We had a double bottom shoulder, breakout to a double top. Pulled back again, created triple bottom, bounced. And then we failed the triple bottom, went down. This is a falling wedge. So you want to take your trend line. Let's just hit this, dadgum, let's hit this shoulder right here. also, then you got a triple bottom right here, a double bottom. At 76, which I was looking at. So you have a confirmation of two support levels here. And that would be a triple bottom call. So you want to go ahead and set your alert off this wick. At the mark and below. Now you could either come back down, which we already did, to a double bottom, which this could be the play right here, or you wait to see if it pulls back one more time and hits that alert. Now that I see this double bottom here, I want to raise this up a little bit because I don't want to miss it. I'll raise it up to that next wick right over here on this candle. So I've got a triple bottom play in idea, and I got a double bottom pullback in play. So if we come back down one more time and break that double bottom and hit the triple, I'd almost be inclined to take this 1, 2, 3 on the way down. So it's a pretty good little setup on Uber. We'll just wait and see if this triggers. This guy's still
in its valuation go into this, stratosphere yet. So this is a really strong play. They also host all the data for TikTok. And so if TikTok gets acquired by a US company, Oracle will continue to benefit greatly. So hopefully, that will happen. And so it's really hard in AI because a lot of the plays have played out, so we own AMD, for example. ASML is also an interesting stock, even though it has a high valuation.
Google pulled back to the
from
63
investments in increasing chip production.
by any means.
So there's lots of ways to play it.
Let's make this clear. By any means, I'm not saying buy any of these. I'm just saying what to look for and where we are. For example, I got this. I've been using the 63. Let me go get my water. I'm gonna show you something here. So I've been using the 63 as a resistance and a support level, a pivot point area. And here on the 1 hour time frame, the 63 is in the red line. So here in the past 6 months, 7, 8 months, I've realized that I need to follow the moving average that represents the trend. So, for example, the 200 SMA on the 20-day, 1 hour time frame, we have resistance. We have resistance. We have support. So I know that would be the bottom line entry to get in this trade maybe. If we come back down and disrespect the 63, my next support level, I'd set an alert above the 200 SMA and look at it every day, make sure that I was above that 200 SMA. And I'm going to put in strong buy off the 200 SMA. On an hour time frame. Now the 65 EMA, you've got support, resistance, support, support, and support. So we hit the 200 SMA 3 times as a pivot point. We used the 63, hit it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times on the 63 EMA as a pivot point on the hour. So I'm more reluctant to say that we are very bullish if we hold the 63 on the 1 hour and bounce back up. I'm saying low support would be off the 200 because it hit less times. It'd be harder to reach. Step number 3. We got a triple top right here. 1, 2, 3. So I'm going to set an alert off the triple top. Now I'm going to clean this up so I can see it a little bit better. I want to find the trend here and see what kind of pattern we have. So we got an inverse head and shoulders. We got a double confirmation that this resistance level at 139.69 could hold if we break the 63. If not, and neither one of these hold, it's a strong drop down here to the pivot point area. You have a PP here and a PP there and a PP everywhere. Oh, Washboardjim had a farm. Yeah. Right there. I like that area. That'll be my second support low. Second support. There we are. The chart is ready. We will just have to see. Did CRM pull back? See, we got a triple bottom right here. $296.70. Next support will be right down here, the triple top breakout. And pulled back, and then the long, strong buy down here off the head and shoulders. Left shoulder, head, right shoulder, boom. So there's your 3 supports from here if this does not hold. CRM. Again, if I have to really elaborate on this, 126 all the way to $318 in less than a year and 4 months. $126 all the way to $318.71 in less than a year and 4 months. Under Biden. with two wars going on, with a genocide. Now this thing does like bouncing off the 9. So I'm going to set an alert right here on the body of this candle. Let's see what these... I didn't like that other guy.
In the big picture. We just had Ross Gerber on. I mean, he was a
Ross
fan
Gerber.
too of this name, and he's not specifically in housing, but thought he saw some good points in this. Your thoughts?
Yeah, Lennar is seeing strong demand going into the spring selling season.
Ross
Sales per community are especially
Gerber.
strong in the lower price segment, say under $400,000. Orders are up 29% year on year at Lennar, but we're seeing some consumer debt delinquencies, which has caused some issues with some mortgage applications.
He
so we have to keep our
is-
eye on that. Mortgage rate buy downs are the key. They've been a really successful for all the public home builders. There's also a low supply of resale listings.
Look at that profile
on the
picture.
market. That's helping the builders because there's less competition.
He is a
30% of
Gerber.
the homes on the market are new, according to data from Realtor.com New Home. So that just shows the builders have the.
I'm going to say your interview on Schwab sucked.
Yeah, and we've seen that because the existing homes don't sell as well. People stay in their homes because they have a good mortgage rate. It's been a good platform for the new home builders. Alex, your thoughts on what you've seen from Lennar and spin it forward. Do you think it will continue into the summer and fall?
I ain't paying crap to talk to you.
Yes, thank you. Yeah, Lennar is actually doing quite well, and the biggest thing is that they continue to gain market share. I think they did an especially great job yesterday at explaining what they call the Lennar machine, which basically consists of a digital marketing strategy that they've been developing. And what that does is it helps them reach directly to the consumer without having to rely so much on
Following
outside
this
brokers.
idiot.
And in turn, that also allows them to devote a lot of their marketing budget to buying down rates. Oftentimes when I'm out in the field, I find that Lennar has the lowest interest rates of any builder, and that obviously appeals to consumers who are strapped in this affordability challenge. And so Lennar is able to maintain a steady pace of sales, right to match along with their construction pace.
Get it right on the message.
They're doing this to consistently gain the access to more labor and obviously to offer more affordable products to consumers who, like I said, are struggling in this environment.
It's interesting because we talk about mortgage rates, and there's also the rates that people pay brokers, and that was actually on the cover of Barron's a few weeks ago, and whether or not the real estate fees would have to come down.
Ooh,
Right? We've had
snow.
trading
Look at
fees
snow.
come down, and a lot of different fees that have come down, and somehow
Snow's
still
took a slapping.
in real estate you still have this high fee environment. Is that something that's going to change, Brad? Could that help overall housing?
It looks like it is changing to a degree, and I think that there's also, it kind of goes back to the competition between the builder segment and the existing home segment. And you also mentioned mortgage rates, and mortgage rates I think are going to decline, but it's a matter of how much. And there's two schools of thought on that. The first school of thought says, well, inflation is coming down, so that should pull down the 10-year, and that should in turn pull down.
Now see, here's one that I wanted short. Lily. In 3 years, from 178 all the way to $800. This year, 313 all the way to $800. I'm a price action trader. I don't care if this company put the man on the moon. This is irrational exuberance. And I wanted to short this thing, and I just didn't do it. And now I'm sitting here biting my thumbs. So now the 200 becomes resistance. Jets they were pumping yesterday. It had a pullback in the morning. So we have an inverse head and shoulders. If you set an alert on that right shoulder and expect maybe another pullback, you might get in this trade. Boeing. Wonder what's going to happen this weekend. Jimmy will not take this trade until it breaks 185.31 past the 63 EMA and respects that number. Do you understand? This is on 1 hour time frame. Boeing. And I still haven't ate yet. My water. Okay, I know what I got to do. I'll be back.
With no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide. No overdraft fees. And enhanced security features to keep your money safe. Also, checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is
laundering money from one account to another is easy.
Start investing.
Is that what he said? He said moving. Did he mean laundering? Schwab? Don't trust him, people. Do not trust Schwab.
It's time to look forward.
Find the next trend.
It's time to look forward. You turned me down before. Will you accept my marriage?
Any device for free.
Let's move
Empower
forward.
your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
If Jenny would let me dress her, I would marry her. But this one, she can dress any way she wants.
Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of
bottoms.
biggest events.
Watch. Okay, the indices.
From bell to bell and beyond.
This is what I see on the indices.
And on demand.
24/7.
Before I go in there and do what I got to do, the indices are at a very critical support level right now. Let's see if you see an abdominal change into the upside. We're alerting the snake on the spy. My God. Huh. Having trouble loading up. What's the deal here? Well, monkey business. Someone said they had a problem yesterday loading up pictures. Oh, that didn't load up either. I'm pissed off now. Huh. Well, let's see if that shows up, but I can't load my picture. Jimmy's pissed. Jimmy does not like it when things don't go his way. Huh. SPX. Snake. The crowd's going wild at the sports arena. We got to break the 21. We do that, it's an easy shot up to the first resistance, which was the pivot point inside of the blowhorn. Yes, I said it. Damn right you said it. You said it loud and clear. We could drop another drop and get a 1, 2, 3, or we could break the 21 just for me. If we do that, I see 51, 22, 49, and I'll invite Johnny Cash over and we'll walk the line.
When you own a Ford, you get the support.
I keep a close watch on this heart of mine. I keep my eyes wide open all the time. I keep the ends out for the tie that binds. Because you're mine, I walk the line.
Double bottom coming up.
I find it very, very easy to be true. I find myself alone when each day is through. Yes, I'll admit that I'm a fool for you. Because you're mine,
I walk the line. Double bottom.
as sure as night is dark and day is light. I keep you on my mind both day and night. And happiness I've known proves that it's right. Because you're mine,
I walk the line. Double bottom.
you've got a way to keep me on your side. You give me cause for love that I can't hide.
1, 2, 3.
For you I know I'd even try to turn the tide. Because you're mine, I walk the line.
Inverse head and shoulders with a double bottom. 1, 2, 3.
I keep a close watch on this heart of mine. I keep my eyes wide open all the time. I keep the ends out for the tie that binds.
Look at the calls.
I walk the line.
RSI. Washboardjim with Johnny Cash. Okay, I'm getting ready for SPX. We got a snake breakout. Not yet. But we have a 1, 2, 3 with a J hook. We're getting ready to squeeze. The option is going to be moved up to 51.30.30. I'm going to get one contract. These are going to be the 51.30. I'm about ready to take it. We're at 440 and it was 420 just, here we go. If I can get 420, I'm going to take a scalp. There it is, 420. Okay, get ready. Didn't hold. We're at my support, which is the head and shoulders. Then we got the double bottom. which would be down here. So this is going to be the spot for my first entry. We can easily come back down to the 1, 2, 3 and hit that bottom channel. Let's just wait. Just give it a little bit more time here. That's our next support level. And then the last one's the double bottom. And I might move this up another notch if it gets down any more. Move it to 51.25. I'm going to type that in here just in case. Man, that was $30 right there, that little bounce. On the 30s. Okay, get ready. Wish me luck on this trade. Right now. Come on, give me 350. There it is. Okay, I'm in it. I called this trade out. We'll see if I'm right. Jimmy called a 1, 2, 3. He done a Johnny Cash song and to tribute it, the trade. And we're going to see if we're right. If you can count to 3, you might have an opportunity to trade with me. If you can count to 4, we might just get a little bit more. If you can count to 3, you can trade with me. Come on, baby. Count to 3. You can trade with me. If you can count to 4, you might score. Open door to me. Can't you see? You are. Come on, baby. Ooh, that's not a. How'd that happen? Shit. Okay. A little early on this trade. No early. SPX just got an alert say it's going down. We got one contract at 350 and we're at 340. 30. You're missing the tape, James. Oh gosh, 310. Yuck. There it is. Oh no. Dadgummit. There's the double bottom. So I'm going to add one right here. $320. Now we got the double bottom. So let's see if this is it. If this ain't it, I got to get out because it can fall a lot more. Anybody take this trade with me right now? Because you're at the double bottom, your lowest possible support. Well, I mean, we can hit the wick. And we did hit the 3 because we did finally hit that third time. This did not. Well, pretty damn close. But it did not hit it. This did. So let's get it. My reputation's in place right now. So everybody on Easy Street wants to see me take this trade to the upside and break this channel. It's in your most interest that you get this done right. My average is 335. And I'm going into the kitchen and grab a Valium and a shot of vodka. Today's rum will be Captain Morgan. Pineapple rum. It's all gone. A whole fifth. So I wouldn't be surprised if you start hearing me slur a little bit of my words. You like that live music? That's my washboard playing. Okay, we're breaking out. We're at 390 now. Anybody take this trade with Bobo? We're at 4. Magnificent. You sold it to 21? Market maker Washboard Jim. That was good exit though. Exiting the 21 was a very good move. Very smart. Yeah, I think 2,000 would be a good rate for a good, nice resort.
Is where that exponential moving average is, and I'm just kind of looking at it from that standpoint and saying that, look, buyers have been stepping in to buy the dips. If that continues to play out, and some people say, boy, I missed my chance before, and it pulls back to around that level, you might see some buyers step in, but it's kind of a binary event, so we'll see what happens.
Yeah, let's break this one down that Joe brought us. April 5th weekly cycle, so 21 days to expiration. Short-term positioning on this example, selling the 815 call or put, 815 put, sell that. Buy the 810 put, short $5 wide neutral to bullish put vertical, collecting roughly about just under $1.50 credit on it. That means you got about $355 in risk on this if you collect $1.45 with that break even all the way down at $813.55 on this one. Joe, I was looking at the probabilities of finishing out of the money. That's what we like, higher probabilities of success. That's about 69% implied that it's going to be the stock's going to remain above 815 into expiration over the next 21 days. That's kind of what you like. And Joe, this is one of those, passive, conservative, risk-defying strategies. And I like to look at these and kind of describe them as, hey, maybe I missed this 240% rally over the last, 12 months. But at the same time, if I'm still bullish on a name, I can still play it, but give myself a better probability of success.
Yeah, and let's say the stock does. Woo! Let's say it does get down there. And, you don't want to shell out $80,000 to buy 100 shares. I mean, the bottom line is you can participate.
You're confusing my traders here. You will be blacklisted if you ever say that again. We're building up. We're beginning to squeeze between the 9 and the 21. It's down to 1 minute and 31 seconds. As I go in to check my Roman noodles, I always grew up, never had Roman noodles ever. I always thought it was like, so I went out a couple months ago and I bought me a pack. I wanted to try them out, and I fell in love with them. I mean, it's the cheapest lunch ever. Come on now. We're creating new Head and Shoulders. Oh, Mr. Bill. So today I got to do this and I got to do that. God, come on. It's not working out. Almost about ready to double up on this right here, but it's at 350. I mean, it don't make no sense. It's not depreciating like it should. I get two more at 350, I know it'll sink on me. So I'm just going to leave it alone. But I think 250 would be 350. If I get two more at 320, make it 5. We're going to know with any minute. Now that it's retested the shoulder line. Yeah, I belched. That was very unprofessional. We really don't appreciate that around here, James. If you can count to 3, you can trade with me. But if you can count to 4, you might just get a little bit more. Perfect for this chart. I don't know why I didn't think of that sooner. I would have loaded 25 calls. 1, 2, 3. If you can count to 3, you can trade with me. But if you can count to 4, we might just get a little bit more. For that, you'll be deducted 5 points. Now we're going to come up and do another 1, 2, 3 and find resistance to break. Jim, can you point that out for me? I'm new to trading and I need all the help I can get. So yeah, if you can count to 3, you can trade with me. Now this is real serious breakout. 1, 2, 3. Now, if you're in this trade with Bobo, you know what to do. Make a business decision, but I'm coming. I'm the 63. I'm so happy. Now, do you understand why I deserve a free trip to Mexico? Say yes. $4.40, $4.50. What the hell? One, 2, 3, boom, to the 63, man. That's $100 a contract. Do I make myself clear? So if you can count to 3, you can trade with me. But if you can count to 4, you might get a little bit more. And if you can count to 5, you might get to spend the night with Jimmy. God, $4. Oh, make a business decision. So we took a double bottom and created a inverse head and shoulders. Once we had the double bottom add-on, we broke out and pulled back, and Jimmy called it. Jimmy said we could see an inverse head and shoulders here. And then bam, 440. So I'm very pleased with this. Now we're coming back down for a 1, 2, 3 with a 1, 2, 3 here. Get ready again. Position yourself. Made a business decision. 3:30. So we retested the right shoulder. I mean, this is how it works. This is it. I mean, it don't get no better than this. How many times have I called that second right shoulder, right? almost a lot of times. Now it's all up. We got a hammer. Oh, no. I don't want to see another one. There's the triple bottom right there. One, two, three. Okay. Let's do this. We're going to clean this up. Anybody take this trade again? Do not take your hand off the mouse. I mean, it's a good long snake. And we can't come back up here and hit that again. We had 380 right there. That'd been a good exit idea. Because I think I'm telling you, this could be the beginning of something real nice here. I'll be saying, hey, anybody take, it's at 1100 right now. Anybody take this trade? Randy? You got it? What's the chart telling you right now? It's telling me that the 9 wants to break the 21. You're on the 3 minute. Yep. Tweezer bottom. And you see the resistance? On the 3 minute. I'm going to say 511682. If you break 511683. You could be correct. I've got private pictures of me and Nancy. If anybody wants to look at them, it'll be $2,000. That's just a sneak preview right there. This is me and Nancy having a night out. Okay, this thing needs to hold. On the 3 minute, it's retesting. On the 1 minute, okay, we can't go much lower than this. On the 1 minute. Right there, and it has to hold. That body has to close above that. We can't go no lower than that, no. Well. That's pretty gross. I had to take that picture out. Jimmy's still in.
Mr. Joe Mazzola, thank you for joining us today. He's the Director of Trader Services at Charles Schwab, breaking down markets and some example trades. But coming up after the break, we're going to take a look at Tesla. Stock's fallen nearly 20% this month and is at 11-month lows. No good news on this one as of late. Fast Market's coming right back.
Well, you better say something good about it. Now this candlestick pattern, let's do some education thing here. Education. I don't see it there. Just see the 3. It's getting real close. We got a higher low, but I don't know how long it's going to last. Oh, we got the 1, 2, 3. So right there. 51.1008. If we can build respect above it, I think we're safe. That'll be a 1, 2, 3 triple bottom booyah mama yay. Now we break the 21, I'd almost run it all the way up to the 50. At 51.2194. 10-4. Actually right there. That spot. 51.21. 51.2099. Has to break. It's pretty volatile. Woo! Okay. You're not making it easy for me. Jimmy will add. Do I have enough conviction to add? Yes. Very risky. But we could have a red Monday. $51.0789. Where did I get that from? Oh, from the wick. Okay, I'll take it. I'll take it there. That's where I'll add. I got one at 330. Schwab and more Alliger. Okay. Right about now. There it is, triggered. $2.60. Take it. Okay. So I got one more at 260. Should have got two more of them at 260. That'd been nice. If I dip again, I'll get 2 times 2. I'm not going in heavy. I'm taking what's his name's advice this morning. Because we can hit down here and hit this bottom trend line, which is right around 5103.40. Okay, well, this is it. Final straw. Could get 2 more right here on these crows, but I think I'd be way too early. Just leave it what I have, but it'd be nice to go ahead and grab 2 more. If I was feeling a little bit gutsy, I grab 2 more right here. Let me think. What was that? 51.30 again. 1 minute, 5 minutes. What was that? Oh yeah. Okay. Could go a little lower. Could see 5100. So I'll wait, because that'd be your next support right there. I'm gonna go get my lunch. I'm still in this beast. 160 down on 2 contracts. I get 2 more. I really like this spot. But I like this one better. 5,100. Which means it could drop a lot more. In 5 minutes. 1 minute. 3 minute. 5 minute. Spin and top. Stop right there. Go to the other candle. If it stops right there, we got to spin and top. Then I'm going to add 4 more. On the 5, there it is. Spin and top on the 5 minute. So I had 2 more. Very wise man. I still have not passed. Jimmy, you need to go. I'm going to go into the kitchen. Nancy? Will you please start the bath water? I mean the hot water, please. Just got a message from the White House. There's no fraternizing with the senators or congresswomen. I thought we were going to break that 21 for a second. Okay, I'll be back. Yeah, to the who, you or me? To the penny. I'm scared. Okay, we'll get my lunch and come back and eat it. And
think that
God,
an
your
underweight
hair.
rating is
Who
warranted.
did that
but
to your
they're still,
hair?
for all that optimism, they're still neutral. They're not even taking on a more bullish stance. They're still sidelined.
Yeah, Mr. Champion of Piper Sandler had been negative on DoorDash. He had the underweight with a, of course, way lower price target. This is a little capitulation. This is, hey, I'll throw in the towel. I'll admit I'm wrong, but I'm not a believer just yet.
That's exactly what he said, basically. Yeah, for as optimistic as what I read, he is still not fully convinced on the food delivery space. And similarly, we saw that analysts also raised their price target on Instacart today to 45 from 36 with an overweight rating, seeing some upside overall to street volume estimates, and said the company's now model overall as a business is already profitable. They highlighted the Instacart's growth accelerating every quarter through 2023, and now the street is modeling mid-single digit growth again next year. They also said that large order sizes and frequency makes grocery a particularly interesting category of gig economy. What I argue, though, I guess, is now every company is essentially an Instacart. Instacart used to serve, during the pandemic, it was to me the greatest way to shop at Costco. I've said a million times, you can go on Instacart and shop at Costco without a Costco membership. That has since gone away, but at the time it was brilliant. So now every other service does the same thing. Uber Eats, you can get any grocery store delivered. Same with DoorDash. So that is, to me, where I'm like, this whole space, it's one I understand fairly well. Every company to me is Instacart now.
It's a good point. I do think that there's probably some synergy to be had through partnerships, perhaps mergers, acquisitions down the line for the names that are in this space that aren't named Uber. What that looks like and who's a part of that, I think remains up to be determined at this point. It may not happen at all. It just makes sense as you talk about kind of where Uber landed in this space, all the success it's happening. It's happening.
Okay, Jimmy is green.
And the fact that it's been able to deliver things, people, groceries, kind of all of the above, where these other companies are kind of siloed. So they can expand that reach.
You shut up. You talk way too much when I'm green. So what do we want to do now, Yoko? We want to break the 63 and take it to the 200. Do we have a misunderstanding? Come on, break it. We got to break the 21. For his eye, Washboardjim. The chartist artist that wants to work for Schwab. Then why do you eat ramen noodles? Because I love them. Blanket. Ocean, blanket. Jimmy can get out even. But I'm gonna see. I don't know. I'm not so sure. I keep looking at that 200. And I keep counting to 3. Okay, here it comes. $285. $295. Let's break it. Let's get this thing to $400. $4. Maybe 5. I mean, this is an exit idea if you're in the trade. Especially at $2. I mean, shit. $220. We're at 310 now. So I'm almost there. Look at that. Break it. Now, someone asked me a question. I thought about something yesterday. Someone said, why did you get out of that trade if you're still respecting the 9? And I'm going to be honest with you. I didn't even think about it. Now that I thought about it, I'm going to try to implement it more. Yoko, don't tell me you've sold already. $400 trillion. Yoko, give me an update. That ain't good enough. Jimmy doesn't like to wait. Ain't that right, Magnificent? Say it. You can't keep Jimmy waiting. Jimmy says he does not like to wait. This only happens when you eat ramen noodles. God, that's so good. So damn good. So we have the 9 crossing the 21. Now, if the 9 crosses the 63, we are going to see the 200 SMA. We'll be more bullish when the 9 crosses the 63, as it takes us up to the land of liberty. I could sell right now. I should have sold earlier. But I don't think we're through yet. The Fat Cats will be back in 11 minutes. So I'm going to go into the kitchen. I'm going to French kiss Nancy Pelosi on the mouth and turn on the tea kettle. Dadgum, girl. Can't you stop that? We're gonna eat a tongue like this. Do, 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 do. It's a beautiful world today. Look at the sunshine. We're waiting for you to squeeze. The heck? What did I just do? Man, that ain't right. What did I just frickin' do? Huh. Oh, God. Always Clean Janitorial. May I help you? This is Jim speaking. Yes. I am in Africa. I am studying the kangaroo rats. You want to do... The National Geographic wants to do an article on my study? Really? Oh, really? I get to... What? And then I get a free trip to the moon? I'll be on my way. Bye-bye. We are... Uh-oh. Uh-oh. Does anybody see what kind of flag this is? On the 1 minute? You know what they call that here in Missouri? They call that a fallen wedge. They call a fallen wedge. That's why I asked if you had a wedgie earlier. Uh-oh. Ladies and gentlemen, we are getting close to the 200 SMA. Make sure you fasten your seatbelts. If we can break this double top and respect it, we're on our way. God damn, you're good, Jim. These are at $3.40. You can make a business decision. We can always pull back and retest this resistance and come back down here, or you can stick it out with the big fat cat and run it up to the 200. But I mean, we're up pretty nice here. 10-4. Damn, that's the wrong chart. Jim. Stop embarrassing yourself, you idiot. Hello, this is Washboardjim Retail Traders. May I help you? Yes, I'm a shoe salesman, and I was watching YouTube and I noticed that you were calling out the SPX. Well, I jumped in that trade, and I didn't quite understand what you meant by the 200 SMA. Well, that's called the simple moving average. It's a slower moving average. It's not as fast as the EMA. So for people like you that are beginning traders, it's always good to learn on the slower part of the end of the scale here. So you want to use that as a resistance level. Can I use that on any time frame, sir? Of course. Right now we're using it on the 1 minute. But I've been accustomed to use it on the 1 hour, and the daily, and the weekly, and the monthly, and the yearly, and that's it. So we just broke what you said earlier was a double top. Does that mean if we respect the double top now, does that now become support? Of course. Once you break the double top, your next would be the third resistance at the 200 SMA. Because we broke the shoulder line right here. So you got a double top. This is resistance number 2. Now you can kindly take profit here before you hit the 200, and you could say you got out of in the heat of the moment. One more question, sir. I hear you've been trying to get some people to gather up some money so you can take a trip to Mexico. I think that's a good idea, sir. You're such a brilliant man. Woo! Nobody thought that was funny? How dare you? Oh, he's funny. You might not think I was funny, but I did. La 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 la. You see that? Snake, breakout, pull back, boom. La 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 la. We're ready for another 1, 2, 3. If you can count to 3, you can trade with me. Wobbits, Tubus, and a freebie. One, 2, 3. Respecting the old resistance. WBD. Still down. Copy and paste these candlestick patterns. Learn the dojis. Spinning top. Long upper shadow. Bearish. Lower shadow. Bullish. Doji. Morning Star Doji. Evening Star Doji. Ouch. Shooting Star. Down on the left corner. Inverted hammer. Jimmy calls that out all the time. Inverted hammer. Type in bullish and bearish candlestick trend patterns. Yeah, I got this one spot picked out in Mexico, guys and girls. What is that?
Earn a 25-cent Hy-Vee fuel saver for every $40 you spend this Friday, Saturday, and well, the
Yeah, my mom told me so. I never should have listened to the things she didn't know. I don't think I'll ever make it home. I don't think I'll ever make it home.
That was a good call right there, right straight to the 200 on the SPY. I'm going to type in nailed it, because I did hit the 200 SMA on the SPY. I nailed the other one too, but I still got a few more left. Damn, you nailed it, James. Perfect. Snake, breakout, pull back, boom. Nailed it. Now what's that red line doing there? Now what's this? What did I just do? Wow, I don't know what I just did. I don't want to remove it, but I don't know how I don't know how I got there. Huh. Is he going to do it again? What the heck? What did I do? I can't be on every chart. What the hell? Oh, I'm on the arrow. So what did I... Create an alert. I think I learned something new today. Oh no. How'd I get that? Huh. What's the deal here? I don't know how I did that, but I did it. I like what I did, but I don't know how I did it. Oh God, it's still coming up. Okay. Show arrow. Oh, okay. Show arrow. So if I wanted this to be green. I learned something new. Interesting. I'm not a moron after all. Okay, we are now at 320. I want the 200 SMA. I want it so bad. Jim, did you notice the megaphone pattern that it's creating after this last sell-off? When you called out those two pullback candles? I see, yes, I do see them. Another one of them frickin' megaphones. I could get out here and make a business decision. What should I do, Yoko? What would you do if you were in my shoes? Besides date my women. You won't get to dance with my chicks. Wait. Wait. In the name of love, don't break my heart. Well, you see this candle right here? It don't look too healthy. $3.30 is a pretty good profit. But $4 is a lot better profit. Get it to the top of the mega. I think it's time for tea. Come on, break it. Today's the 15th. Okay. So all and keep the runner. You'd sell more than half. How about right now, baby? I think it's time to get out. Well, I'm ahead. Hello, this is Retail Traders. Come on in. This is the President of the United States. Jack, what are you trying to do making all these people rich? We need to keep them poor so we keep our building blocks strong. We don't want to let the secret out that you can do anything you want if you live in America. We want to make it. We want to let them know that you ain't worth a shit, and that you need the government. I can't win this election if you keep this up, Jim. So I'm going to make sure you're getting audited by the end of the year. I heard what you did. making all kinds of money. But Mr. President, don't you know the more money I make, the more taxes you get? And if everybody made $1 million apiece, you'd have so much money to spend you wouldn't know what to do with, Mr. President. Well, I never put it like that. But I'll catch you later, Jim. Don't worry. This last 10%, it's on me. Bingo, double top exit idea. Now, if we come back down here, I could think about taking it one more time on this bottom of this here mega. But actually, let's lower that support line to head and shoulders. This is on the 1 minute. In fact, leave it right there. Yeah, somewhere in that area. 5113. Dash 21, no lower. The 5130s are back to 250. Randy. Yoko. Strike 5130. You ready? 245. I got one contract. Then if it dips, I'll buy 3, 4 more. Now what the heck? Somebody's come in here. A damn mole. Something just don't seem right. I don't know how all this got changed around. I hit the wrong buttons, what I'd done. 15? You gotta be kidding me. Does it get that small? What, do you get some kind of upgrade or something? I don't know, something awful fishy going on here. Grab me another contract. If we hit this, grab 4 more if we hit this bot. There we go. Right there. $235. One, 2 bits, and a freebie. Oh, shit. Don't do it. Oh, we can drop a lot more. Oh, no. Okay, I got to really think about this trade here. If we don't break here. Because we could drop easily. Yeah, we could drop all the way to here. Attempting to get out of this trade before it's too late. Yeah, we could easily drop down here. Easily. WBD, race, set, go. Break it. Go get my tea and I'll be right back. Almost even. $230, $230, $45, $250. Let's break it. We got a 1, 2, 3 target, or a. We could hit this. Oh, looky, looky! Damn, I'm good today. Jim, did you notice that higher high last time we were up? Yes, I just now did. Thanks for reminding me. Washboardjim just now upgraded the SPX price to 5117.12. Do you understand? If anybody that's a beginner that took a trade that's not making profit, take it now. Take it now. Business decisions need to be made if you want to hang out with the fat cats. Businesses decisions need to be made. Business decision. Magnificent, would you like to take that back? I don't know if we can let this go on here. I'm not seeing no boom, sir. Are you cross-sighted, far-sighted, or nearsighted? Very good. I think you need to call a triple top a boom. Wouldn't you? To the 200 SMA? I can't make it any clearer than that. Jimmy's out at $3.50. That's more than $100 a contract. Calm down, Jim. Snake breakout pullback, a boom. Man, you're getting hard. I need a new grader. Woo! The guy is crazy. Hello, this is Washboardjim, Retail Traders. May I help you? Yeah. We were kicking back watching that cool call you made, man. You called that 200 SMA out and you hit it just like you said. Is there any way that you could smoke a joint with us? I'd love to go back home and say, hey, I smoked a joint with Washboardjim as he called out the 200 SMA. Cool, man. One day you'll be just like me. You'll be able to date nice women like Nancy Pelosi and AOC. So let's take a clean, I'm going to clean this chart up and show you what I saw. And it'll make everything so much easier for everybody. But we could have a bigger boom here. Magnificent. You might want to throw in A plus you gave me already. I think that Mexican trip for a bonus would be pretty good if we go ahead and break on out to the upside here. You don't know me well enough, Magnificent. Jimmy subtracts nothing. He just adds. Can anybody tell me where the next resistance is, please? You're right. 51.22.64. 51.25.91. I think we just got the big boing. So we have, I'm going to clean this up for you. I'm going to show you what you're looking at. I want to make sure that you understand what this is right here. This is it. This is what will make you a winner. If you have patience, if you know what it takes to have patience, write down this exact same chart when I'm done with it. You got the trend. You got the breakout. You got the pullback. You created an inverse head and shoulders. You got the trade. You didn't get here yet. You started to pull back again. So you sat down here and you said, damn, that second pullback on that right shoulder. Second. 1, 2. Now, if you have the patience to sit this out and wait for that second pullback and take the trade, I'm not saying it's going to work 100% of the time, but that is the sweet spot of the inverse head and shoulders. Yes, you got your first initial pullback, breakout, but that second pullback to that right shoulder, that's the sweet spot on the bat. If it doesn't break the triple top or whatever it breaks from there, you want to get out of the trade. But that second pullback on the inverse head and shoulders is the sweet spot. Jot that down. Type it in. Second pullback on the shoulder line is the sweet spot. If anybody ever played baseball, this is your bat. You hit the ball here, you have the possibility of foul balling or breaking the bat. You hit the ball at the tip of the bat, you have a possibility of foul balling, striking out, or breaking the bat. You hit the sweet spot of that bat, that's where all the heat is. It's where all the torque is. It's where you want to hit the ball to hit the home run. Right in there is the sweet spot. You hit the ball, connect in that spot right there when you bat. Learn how to bat. Some people like to choke it, and some other people like to go for the slam. Choke it, bunt it, whatever it takes. But you hit the ball here, it's going to break, and it could chip up here and break up here too. But you slam it right in there, man, I'm guarantee you're going to get a home run. Sweet spot. Right there. Sweet spot. Well, never really thought about that, Jim. Comparing baseball to... Yeah. Well, see, you got your first resistance is first base, second base, third base, and a home run. 1 strike, 2 strike, 3 strikes, you're out. So, did you do it again? Oh, man, she's beautiful. Who's that, Randy? Is that your daughter? Randy posted a picture of his daughter. I love her. That's kind of woman I love. I mean, she would be so easy to read. I'd have her trained so fast within the first day. I'd turn that girl into an angel. Jim, are you calling out another inverse head and shoulders again? I guess. If that's what it takes. You sure did, didn't you? Damn, you're good. Let's break the 200 SMA this time. I'm not in the trade no more. Bob Summers says Fed is wrong and neutral warns the rate cut speech. Larry Summers. Larry. I'm so beautiful to me. Makes a nice pop when you hit it. That's right. You got that right, mannequin. And we're always looking for the sweet spot.
Apple's had 6 declining quarters of growth, right? You take a look at Google, they have privacy problems. And then if you also take a look at Tesla, it's the number one underperformer in the S&P 500 for the year. So look.
This guy's pissing me off.
NVIDIA, direct benefactor of AI, Microsoft, cloud computing with AI, Amazon, another major cloud computer and benefactor of AI, and of course Meta. So my point in saying this is that I think AI is here to stay, and we're going to get more growth as quarters progress.
And you had also some thoughts on Bitcoin, for example. Are you a believer in Bitcoin? You mentioned Tesla here and Apple. You know, is Bitcoin, does that have room to run? Tesla and Apple that have pulled back, do you see opportunity on those kinds of pullbacks?
Absolutely. I think Apple is one product away from going back in favor. They had 6 declining quarters, right? They really haven't had as much innovation, but it's still a great company, great balance sheet. And whether it's a new phone, a new chip, a new computer, the new heads.
The guy's right. I don't want to put him down because, I mean, everything's trending the way he says.
What happened last month? All of a sudden, you
he
have
gets
major
5 out of 5
institutional players like
wash
me. I
boards.
manage money on a discretionary basis for clients. I could never have exposure to Bitcoin until a month ago, meaning now I can buy the ETFs. I can buy the mutual funds. So because of that, you've seen the nice run up from Bitcoin, and it's trading approximately
Great job,
around
mannequin.
65,000. I think Bitcoin.
That's good to know, mannequin, that you picked up the strategy and it's working for you. It's not that hard of a strategy if you just take a few minutes and study a few patterns and have the patience to wait for that pattern. Once it breaks out, probably 10 or 12 patterns, counting candlesticks. Learn them dojis. Start watch once you break out of that trend, out of that snake. This is what you got to learn. Once you start breaking out of this snake, these are the candles you got to start looking at and look for that pattern. But you got to see what they recognize what they mean when they pull back, or like this is called a shooting star. Okay, that's called a shooting star to the downside. It more or less, will pull back. Learn them patterns. Study those congested stock. Recognize what's bearish and what ain't through the candlesticks. Here we had a hammer on the third crow. It's called a gravestone. Almost a gravestone or an inverted hammer. Morning star. We got a symmetrical flag here. See if they can pull back down to the shoulder line again or make a new shoulder. Mean how much? That heart's in the way, I can't see it. 600 or 6,000? If you made 6,000, I want my free trip to Mexico. I want it now. Meta at the 200 on the 1 minute. Man, what does this tea taste damn good today? When you're out of coffee, it tastes real good. Sip, sip. Oh, 600? Okay. Well, that's still good. MSCI. Let's see what you took here. Damn, you got lucky on that one, I think. Are we looking at the same stock? No, we're not. Oh, well, I got it typed in wrong. I was going to say, that don't look too good. Oh, yeah. Yeah, there's a couple good trades on here. This one right here for sure. One, two, three, boom. Then you got another snake here with a double bottom, inverse head and shoulders. Cozumel, Mexico would be great. Cancun. This is the one I'm looking at right now. Viva Windham Maya Resort, Playa de Carmen. AMD was a very beautiful trade this morning. This is something that, here's a trade idea, strategy. I've got each one, this is all in the same sector. These are, I should have NVIDIA on here. But I got AMD, Meta, Amazon, and Apple. Now, I come in here in the morning and I'll see if any of them are like at a double bottom like I did today on AMD. I spotted this trade out real fast. So that's in the same sector. This one was below support, so I didn't call it out. Same here, below support, went ahead and failed. Same here. This one was the only one that looked to me like a trade right at open because I had a clear pattern of a double bottom. So I got these set up in sectors. I got airlines. If I want to trade airlines today, something was up with airlines, I'd go straight to the airline ticket. Look at the 20-day, 1 hour, pull up the 1 minute. See if I had an opportunity to trade these. But not today. Maybe now, because we pulled back to, you know, day low again. But nothing's happened. Nothing's moving on them today. So that's another strategy. Put them in sectors. SMCI. First thing this morning, you know, I come in, I said, damn, man, I got me a wedge here. We could have something going on here. We got a wedge. Snake wedge. Boom to the 200. The video first thing this morning called this one out. Snake. Into a megaphone. This was a good trade. You got your big long snake, and then the pattern was the megaphone. Tesla. Snake into a symmetrical flag. Snake. Uber. Pointed this out first thing this morning with a triple bottom. One, two, three. 1, 2, 3. Boom to a double top. Exit the trade. I like showing examples how easy it is. That first hour is so easy. That's where it creates what kind of day you're going to have. So you come in here. Jim. Baba just broke out, Jim. You got to be kidding me. Let's look at it. God, man, I think, man, this is a nice looking breakout here. Let's look at it some more. Oh gosh. Hey. Oh. We just made a snake. We pulled back to a higher low off the 200 SMA. Oh, shit. Jim. Is that what I think it is? Yes, it is. It is. If you can count to 3, you can learn to trade with me. How in the heck do you make it look so easy? Well, I learned this when I was in first grade. I was able to count to 253. Then I went to 254 and I got more. 1, 2, 3, break out, pull back, boom. Baba, nice breakout this morning. Pulls back to a double bottom, higher low. Shit. Jim, we pulled back to a 200 higher low on a double bottom, baby, yay. Oh God, we did. Let's see if we get a tweezer bottom. What do you mean tweezer bottom? Yeah, if that second candle comes down and matches that first one, I think we're here to go. 1, 2, 3. Boom. Snake, breakout, pull back, boom. Jim. I think we pulled back to another pattern, Jim. On Baba. What are you talking about? You see what I see? Fuck yeah, I do. You just called this out earlier on another trade. The head and shoulders with the second right shoulder. Boom. Double top exit idea. Head and shoulders. Hey Jim, I just got in. What time is it? Oh, it's around 1:07 p.m. So I think I see a snake here, Jim. Are you kidding me? Another one? Damn. You ain't shit kit in the caboodle. It is. Can you count to 3? I think I can. Well, let's do it. One, 2, 3. Snake, breakout, pull back, boom. Oh my God. Jim, I just got here. What time is it? Well, it's now 12:33 and the fat cats just got back from lunch. 1:33 Eastern time. Do you see what I see, Jim? I said, fuck yeah, I do. You gotta be kidding me. Another head and shoulders? What? Yeah. 1, 2, 3, breakout, pull back, boom. Jim. We're starting to form another snake. Pull back to the 200? Hell yes. That could be a solid support. Because we broke the 200. And if we respect the 200, we might go to a higher level. Now, someone earlier in the room made a comment that he didn't see a boom.
In client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account.
It's really not a higher level yet. It will be. I guarantee it. Magnificent. Yabba dabba doo. I'm about ready to go in there and make another glass of tea. Uh-oh. My cousin Jeff. Or my brother Jeff. You still look like you did when you were 2 years old, last time I saw you. Okay, that's going to have to. This is quad witching. We've got to see what this last hour will bring. See if people reposition and the market starts to go green. Jim, what a great week. YouTubers, this is something that I did to occupy my time learning how to trade. I took up painting. And even in paintings, I was able to take a pivot point area, which is a horizon line, create resistance and support. And I did it in several paintings. A little African scene.
Interesting. ICE obviously owns New York Stock Exchange as well. When you talk about the commodities space, do you watch everything else in commodities? Anything standing out to you thus far in 2024? Anything jumping out at you that you'd care to share?
Yeah, I mean, we definitely keep an eye on pretty much all of the energy commodities. The one that I think most people are talking about right now is natural gas. Natural gas started out, I guess it was December, was around $6 at the beginning of December, and now it's sub $2 right now. And so a lot of people are taking a look at what that impact is and how that may manifest itself over in the electricity space. That's been like the only really interesting other energy space thing we're seeing right now would be what the effect of natural gas would be. And if you're going to see this weather materialize in the summer, if you're going to see more of a gas burn or gas-fired power generation.
Yeah. And it was interesting when you said a Google search 1 watt, AI search 100 watts, and it takes 1,000 watts to train the search. By the way, thank you for providing those for me, because it really paints the picture of what's needed. Maybe you heard our last conversation about solar and, you know, that sort of venue as well, because basically you're going to need different routes. As you noted, we're not going to have the electricity for EVs. I mean, they're pushing for everybody to get an EV car. We saw in California that didn't go so well.
Right. So with respect to solar, with solar and wind, those renewables are not dispatchable, meaning that you can't control the output. So on a large basis, what happens is if you've got, you know, a cloud shows up and the solar's not there, or the wind doesn't show up, you still need to have a certain amount of dispatchable generation where you can control the output. And so the variability just kind of adds to the supply-demand imbalance. It adds to the volatility. It adds to the issues that you're looking at here. So there is a place for renewables, and we do think that there are multiple routes that you need to go, like you talked about. The U.S. has a goal of being 85% renewable at 2030 and 100% carbon-free by 2035. But again, you're starting to see a lot of those things get walked back and delayed just because of the reliability issues.
Yeah, I mean, and you know, when people started to worry about the economy or they started to worry about war, guess what was totally forgotten, right? We went right back to the days of old. I mean, nobody was focusing on those types of things at that moment. Tell me some of these quotes, Buffett, Musk, some thoughts that really resonate with you maybe or that stand out to you.
Oh, sure. So Warren Buffett, I guess 2 weeks ago, was on X or Twitter, whatever they call it these days. And he was saying that U.S. power consumption is greatly understated. And he owns the utilities, via Berkshire. And so he's kind of got his finger on the pulse on what he's seeing, I think, as a really good indication of that. Elon Musk was in the paper, I guess, maybe 6 or 8 weeks ago. And he was saying, whatever you think power consumption is going to be, multiplied by 4, and you're still understating it. And then recently, EQT, the CEO of this natural gas company, they came out this week and they said, look, we see a huge electricity demand and we need to build more gas pipelines and we need to build more gas plants simply because of these reliability issues and these demand issues. So we're still thinking that the supply and demand equation, it's just not balanced, and it's going to be an interesting summer if that heat actually shows up.
You know, it's interesting because as we get into the summer driving season and we're seeing oil creeping higher, but to your point, as far as electricity demand, I mean, people have heated driveways now. I mean, I think that we talk about Americans' behavior, right? And any lights or things or, you know, bells and whistles, I mean, everybody's on board for everything.
Yes, exactly. And not only with driving, but you're seeing there's a lot of different communities right now that are basically prohibiting, I guess the rule they call it is no gas stoves. What they're really saying is you cannot hook up any new residential or commercial to the gas infrastructure. They want it to all be electric. So there's just so many other things and so many small things that when you add them up in aggregate, just create a really big supply-demand imbalance.
And last but not least, your place in the global picture. I mean, you did talk about back-to-back winters that were particularly warm. I mean, we had Vail Resorts coming out and noting that. My own ski slope here in the Catskills had very little snow. But in the global picture of what we need here in the United States of America, do we have it? Can we? You said demand is grossly understated and supply overstated. What do we need to do to stay, you know, our national security, to stay as a front runner, et cetera, Timothy?
Well, what you're seeing right now is Europe was kind of leading the charge in terms of being green and going for, you know, totally renewable generation. And now you're starting to see some places like the UK came out last week and said, yeah, we're not going to retire coal and natural gas as fast as we said we are because we need them for reliability issues. So what I think you're going to see
need them for war.
Of this shift towards when we're going to try to be 100% carbon-free generation. I think that's going to get pushed back a little bit. And I also think that the U.S. is going to need to reconsider nuclear generation.
So I'm sitting here and I get a knock on the door. I'll get there in a second. I'm in here taking a shit. Oh, what? We got a double bottom on Tesla? Are you serious? Should I take the trade, Jim? Well, I think you have a good opportunity here, my friend. Great call. Great call on that 1, 2, 3 right here yesterday too. Out of a snake. You're really starting to impress me. That call you made yesterday and then this double bottom you called out just now. How in the heck? Who taught you how to trade like that? Oh, you taught me how to count to 3, Jim. I never could pick that up in grammar school. The trade you called out yesterday, yeah. In fact, I counted to 3 twice, Jim. 1, I was looking for the sweet spot on that bat, Jim. And we broke out. We didn't quite hit it up here yet. And we pulled back just like you said, Jim, to a higher low, and I took the trade. Then I really started freaking out. You know, you say at higher low is always a good time to get in the trade. And, well, I did. And then all of a sudden, we hit the 63 and we started to pull back. And we broke, and I started worrying, Jim. I said, don't worry. If you can count to 3, you can trade with me. The same rule goes for the bottom, Jim, high or low? Yeah. So I should have added on right there, shouldn't I have? That'd been a good idea if you did. Where's the exit idea, Jim? Well, you called it out yesterday. That was a great trade. You said the 200 SMA, and you took the trade and got out of it. Nailed it. And then you come in here this morning and you're knocking on my door, telling me about a higher low double bottom. Are you serious? I said, yeah, Jim. I'm getting good at this. I took that double bottom, what you said, the very lowest spot on the body of that candle. I took a lot of time, made sure I had it right this time, Jim. Tweezer bottom. And I went ahead and I drew that in there. And I got to pull up the wrong one. That's the one we want. So I'm sitting here, I'm on lunch break. What's going on here? Something ain't right. Oh, there it is. So I noticed we had a little bit higher low from that double bottom, and we did pull back below support. So I took your advice, Jim. I went ahead and I drew the 2 left shoulders together, connected it to the right. Had my little head and shoulders in here. I drew in my neckline. So once we broke out of that snake, I saw the pullback and I took it, Jimmy. Beautiful call. Burned down at the double bottom and almost hit yesterday's low. Boom. So I got right in here. I showed up right when we hit the double bottom. It was approximately right around 12 o'clock Missouri time. I noticed this falling wedge. We had a snake break out. Inverse head and shoulders. So I noticed the falling wedge. And Jim, we got a fallen wedge here, man. Well, let's see. Let's wait for the breakout. Boom, we broke out, Jim. Uh-oh, uh-oh. You see what I see? Inverse head and shoulders. We broke out, pulled back, boom, to a triple top. Get out of the trade. on Tesla. When they start to squeeze and they break out of the channel and pull back, that's when you got to start looking at patterns. And there's your inverse head and shoulders out of a wedge. $10.4. Falling wedge with an inverse head and shoulders. And that's what you got to look for. And when you see it, you go, God damn, Jim was right. He's always right. Falling wedge into inverse, inverse, I-N-V-E-R-S-E. What the heck is all these things doing on me? I don't know why it's done that, but it has. These numbers have gotten lower. It used to not be like that. I think I got an update in here or something. Let's see what bold does. Man, that's a beautiful chart. You see where the exit idea, right? Say yes.
each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Be part of the latest commodities action on
The crowd is getting ready. It is now power hour. We've been going sideways most of the day. We're at resistance on Tesla. We're at resistance on the IWM. We're at support levels on the SPX, the QQQ, and the SPY. Above the 200 SMA on the 1 minute time frames. I will be back. I will be back. Back. Oh.
Or any action, but I kind of thought maybe we get some more follow through to yesterday's selling in treasuries, considering just how much conviction was in that trade yesterday. But nevertheless, bonds only down 10 bips, so you kind of remove that risk to the market. That helps the small caps firm up. It helps with some of the riskier interest rate sensitive sides of the market firm up today. Nvidia also turned around from being lower earlier, so that of course helps. But chip makers are actually still basically unch on the day, so the Nvidia bounce back is kind of standalone. And if you look at the last 2 weeks, you know, it's lost some momentum here. It's not that it's a problem by any means. Could certainly just be a range-bound trade. It could be maybe a sideways triangle. I don't know if it's an ascending triangle. I think that would be kind of hard to argue. So it's not the most bullish chart, but it certainly is not a bearish one, really by any stretch of the imagination. But still, to see some two-way activity in the chart for Nvidia is worth noting, just obviously because it's been a runaway trade to the upside, and now we're still below 900 bucks. So as that has stalled out, so is the broad market. Big tech trades been more mixed than strong, and some of the earnings from this week also were a bit disappointing, as we talked about Adobe today dragging on the market. We'll revisit a few other tech names, including Jabil, the engineering business, so it supplies a bunch of parts to companies. But overall, it's a pretty sleepy session. Wanted to point out a few things. The anti-beta fund doing decently here, and over the last 2 weeks, it's kind of standing up for itself. I've mentioned this ETF, this factor fund, as a potential hedge to some of the market concentration that we've seen when the market's gotten very concentrated on this big tech stuff. the days where we've had sideways or down movements, particularly when there's downside, the anti-beta fund, which goes after the stuff that has been moving the least. Obviously, the high beta trade has worked very well, but the anti-beta trade, BTAL, works when the stuff that's been working doesn't anymore. If you look at the 10-day chart next to some of the other categories, it's looking pretty good the last 2 weeks. So the reason why I bring this up, not because I think it's necessarily going to keep going or that NVIDIA has to crash or anything like that. It's just more trying to answer the question of what to own if you do want to try and hedge some of the recent dynamics of the market, which has been the ChatGPT-centered AI trade, which is pretty well embodied by that chat ETF from Round Hill's Dave Mazza. You've got the growth fund in their SPYG. Value has done a little better over these last 2 weeks. So we're getting a slight little taste in the last 2 weeks of maybe what could fill in the gap if NVIDIA stops leading this highly concentrated tech rally. To some degree, a little rotation into value, but actually more just betting on the companies and the trades that have been absent from the market, but also in the opposite corner from the stuff that's been working. So the high beta trade's been working, and right now when the market slows down, because it's been so concentrated in that group, the anti-beta trade BTAL has been one of the best performing factor funds. So that is just kind of a way to think about hedging the overall market regime of the last couple months while staying within equities. So some food for thought for you there. The last piece is that the commodity group has caught our attention this week. DBC there is up again today, not because of crude oil, but actually because of copper, which is rallying, and a few other commodities that are firming up. So that basket is getting a little bit warmer alongside with all the inflation we got this week that was also warm. We'll talk some more about that later on in the show. Right now, I've got Jenny Horn here with me, host of Next Gen Investing, for some tech talk.
Some tech talk.
Yeah.
What do you want to start with?
What about Jabble? I kind of like Jabble because the name is fun to say.
It is fun to say.
It goes overlooked generally, but it actually has got its hands in a lot. They supply to a lot of big tech companies.
They do, and they also, I mean, like, are consistently, like, profit. I mean, like, this is, like, a well-established company as far as how large it is, but today, facing for its largest percentage decrease since December of 2013. So, like, 11 years we're seeing, basically, when it dropped 21%, so not seeing that degree of selling necessarily, but overall, everything guidance. I mean, guidance was, like, the theme of the disappointment as far as these earnings went, is they gave overall guidance for now their current quarter that was below expectations as far as earnings per share. They also reduced their forecast for 2024 to around $28.5 billion for as far as overall revenue. That's down from $31 billion previously expected. And they said it was always going to be a transitional year. The CEO said this shouldn't be a huge shock that they're updating their footprint, their cost structure.
What did they do to your hair?
They're very much saying that the sale of their mobility business was another reason we saw this lack of guidance now going forward. But
$2 billion, right?
$2 billion, almost $3 billion.
Oh, wow. Okay.
Yeah, so yeah, $3 billion, $2.5 billion is about what we're down or projecting to be down now for the rest of this year. But they said despite revenue headwinds, they're expecting some short-term volatility, but they are overall saying that they're a resilient business model and still have the ability to execute in this environment. But ugly chart today, ugly red candle that just, I mean, we've completely broken down below now our major moving averages here.
Okay. There's Adobe we're looking at right now. We're talking about Jabba, which is down, but Adobe's down pretty big too, which was more earnings related and kind of disappointment related. You know, it seemed like Adobe was kind of a situation of promise without a lot of material behind it right now. They're talking about all these things they're going to do, but then they just went and bought back their shares instead and didn't give some big, breakthrough guidance.
Well, I think right now, so the difference about Adobe and some of the other tech names we looked at in terms of like their AI presence is it's here. Like we have the Firefly suite and we know its capabilities, but you're the one that I believe said if you just go on like these image generators, they're amazing, first of all. So all of a sudden this skill, I was having this argument with Alex Coffey earlier today where we were saying, I believe that this skill set is one that's been so niche and it's so difficult to use some of their tools that AI was a good thing, but Alex made a great point that I now agree with, that was their competitive moat. For so many years, their business model has been insulated by the fact that it's difficult to learn these various tools and it's something of a skill set. So now if you have everyone that is able to do various like Photoshop, photo editing, Premiere is one of their major programs, what does that look like for then your overall, you just made this basically applicable to everyone. You eliminate in your moat.
That's to me where I was a little shocked that they delivered a buyback worth 10% of the market cap, because it feels like they should be spending every dollar they have right now to ward off that competition. And if you don't think it's coming, I've found that some of the commentary from analysts seems a little bit lackadaisical. I mean, you've used them before. I think as journalists, most of us have used like a lot of these applications in different ways, whether it's in design, whether it's Photoshop, whether it's even 3D Studio or Premiere. I mean, they are going to get swarmed by AI, and they already are.
They already are. We're already seeing disappointing guidance. They're already tempering their growth expectations for AI.
Yeah.
I mean, what does that tell you?
You know, you just got to keep this quiet, because you're going to get people that are going to come in here. Somebody's going to come out with a company. They probably already have. We have the perfect AI setup for picking stocks. They're going to change the name. You know, you get these people that come out, we got the best scan in the world. All of a sudden, they'll market themselves. If we had any sense at all, we'd go out and buy an IPO right now. Not an IPO, but a gosh darn domain name with AI in it. Some kind of real cool name, AI picker stocks, stock AI picker, and buy it, and then sell it for 30, 40,000 in 5 years. I'm telling you, back in 2007, when the wise guys, me, 2 other guys got together, we created a platform kind of like TrendSpider, but we had alerts. It'd pop up alerts. We had the scanner set, AI. I mean, and the website had the chart. You know, kind of like Ameritrade. Kind of like the way they do them. Where in the heck am I here? But ours was a little bit more sophisticated. We had the chart, we had the scans, we had the top 3 picks, the top 5 on the scan. They were penny stocks back then. They weren't big time. First chat room we had was the penny play. That was back in 2004. And then we created the wise guys, and you had to pay to get into that room. And I didn't want no part of the paying part, but after it started thinking about it, I said, man, this is a great idea. To have a platform that had different kind of alerts on them, and this was back in 2007. Oh, she still had that, and that was we could be, yeah, I could be a multi-millionaire with that strategy, with that idea. Then I created a website. I had one of my own, Wash Stock Talk. I don't know if you can Google it anymore. it's not on here anymore. Yeah, it don't come up either. Are they still doing this? Yeah, it's out. Looks like it's over. God. Huh. Huh. I don't know if it's the same site or not. Could be. Interesting.
Rather than a full-blown de-risking posture.
When you talk about rates, let's discuss that for a second. I see that you've bought more duration in fixed income. Is that because you think it's a good deal and rates are going to go up? You want to capture it, or walk me through the outlook there?
A little bit of both. So it's more, if we are wrong, I think our base case is for an economy that grows in the 2 to 2.5% range, and that's good for corporate earnings, and one where the long-term disinflationary trends reassert, no matter how bad this sort of temporary rebound in inflation is. So I think we've crossed the peak in inflation, and therefore we are really owning longer duration fixed income.
Thepennyplay.com. That was probably the first chat room. They ain't posted since 2011. Yeah. I should have stuck with that community. The wise guys. I don't know if that's the same. It'd have to be the same bunch. Well, I'm still making money on my idea. We could easily pull back to the 200. Here, have a couple real nice red candles and bounce off the 200. If that doesn't hold, it'll be the other one. Could be this head and shoulders. Your second support right there. First. 10-4. Well, actually, it could be right here. It might be too late. I'm just triggered.
Knock, knock. #1 broker here for the #1 hitmaker.
Thanks for swinging by, Carl.
No problem. So,
We just triggered our first support. AVGO. Let me look at AVGO and see what this was here. Alert. Is that? .34 short trigger. EMA triggered. So it's an AVGO chart. There it is. Oh, it triggered off that one. Can't read it. I can't read these charts. I was watching AVGO here on this alert. I'm not looking at trading, I'm just watching. Looking at the price action. Expensive. Very expensive. I mean, $1,300 is $11.10. Yeah, it's just too much. Too much. I really don't need this chart.
So yes, I think if you suspect they're starting to miss earnings, you have to get out. I don't think that happens in the next couple of quarters, and that's because the underlying consumers of their products, NVIDIA and Supermicro's products, are these big blue chip companies with a lot of cash. It's completely unlike the internet, which as soon as the capital markets went away, Cisco's business went away because those guys didn't have any cash, didn't generate any cash. So, clearly the big hyperscalers can afford to keep spending through any temporary shortfalls. And so I don't think there's going to be any big diminution in calendar year 2024. Now, anybody that says they're smart enough to figure out what 2026 looks like is smoking something. So I'm not going to, but I think for the next couple of quarters, that trend is.
I'll tell you what's going to happen.
All right, that seems like a level.
There will be no wars if Trump
I'm
is
not
elected.
trying to make big calls for multi-years out, but understanding that there's a lot of momentum behind right now to not try.
There will be peace on earth. Remember that. Magnificent. You remember my last quote? I was 100% right. No wars if Trump's elected. And that in 2025, it'll be free the nipple.
But I think getting back to your earlier point, there's just limited ways to play this technological acceleration in the market right now. And as Adobe showed you today, there's some people that are talking about AI but not really putting it into earnings. With NVIDIA and with SMCI, you're seeing it into earnings now as well.
All right. Great conversation, Reese. I'll be in touch, and best of luck at Wave. Congratulations, and we will follow along next week, too. Thanks for the heads up and what to look for.
Thank you so much.
I appreciate it, Reese Williams, Chief Strategist at Wave Capital Management, WAYVE. Coming up, Rick's in the options hot seat today, and he's got a couple interesting trades. NVIDIA will continue that conversation, but 3M after a new CEO, and look at Groupon getting just wrecked.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous.
I remember you were very nervous. You were shaking. You were shaking. You were so scared. You didn't know what to do. Jim, what do you see on the 5-day chart on the SPX? I see a pivot point area. If we can stand above 5125.91, we will go higher. It's a good idea, Jim. I think I made a point of this earlier. 5125.91 booyahs. No, it was 5120.99. So if we get above 5120.99, that's going to be our granddaddy support level. And I made that statement today at 11:51 a.m. Missouri time, which would be 12:51 Eastern time. My reputation stands upon it. $51.20.99. $51.20.99 right there. We'll make it 97. I hit it 7. Right there. Perfect. Now, if we can build support above 51.20.99, which is, we're going to change it to 97 now, we will be gaining respect. But we have a 1, 2, 3 triple top. Dadgummit. You have to ruin everything. Right to the penny. I don't know. $51.15.51. Whoa. All I'm saying is we got to build above 51.20.99. 9.9. And I'll take your 51. Oh, 51.15. God. Oh no. You can't do that. $51.15.51. Oh, I had it right. I'm trying. Oh, right there. I'm going to say 55. Oh, I didn't do it. Oh. Phew. What a pain in the ass. You can do it. Well, I can see you hitting yours. You got a couple good reasons. You got a 1, 2, 3. And you got the 200 SMA. It's more in your favor than mine. Well. I touched my thing, but it didn't go above it. We could have a winner here today. So might as well get the grade out. Get it all ready. So all I have to do is just hit the enter. I'm going to give your grade to you early. I'm so funny. I misspoke. There it is. Woo! It doesn't matter if I hit mine, because I said above it. So the winner, unanimous decision, goes to Magnificent. Yeah, I guess an A plus. I'm gonna try it. See, it won't let me type A plus. Room won't. Who got? What's the bot? The bot won't let me type A plus. Well, I guess I can move you to trusted now. Woo! You know what? We could see 5114. Do you see it? We need another right shoulder in here. Randy? God, these things ain't that expensive. They can't be. I got a problem here. Oh, that was because of AM. 5125s. $51.25. I don't know. I just don't feel like trading. I don't want to ruin a good day. Oh man. That's low. We're going to see if it holds this shoulder here. This line right here. That's my support. The next one would be a 1, 2, 3. So we do have another option. Another shoulder. Dang. Talk about head and shoulders. This would be the spot. But we could drop one more candle to this other support level right here. Right there. Perfect. Right on the dang line. 51.12.90. 51.13. See, we're bearish As long as we're under this here candle. We get above it, but then we got all that to fight. So I think it's going to come down here. I hate this. Thought I'd never get tired of owning a business, but I am. Nice little bounce right there. 85 to 105 off that shoulder. Magnificent won't give me a grade for that though. We'll let him have it. We want to retire at the top. Comes the 21. 120 bucks from 85. Boom. So if you took that trade, anybody, you hit that 21 EMA into the lotto, you're out at 120 easily just right now. From 85. And that's the right shoulder. I've been talking about it all day today. The sweet spot. So you got your left shoulder, your right shoulder, and then it came down with a tweezer bottom to the right shoulder. And called to break the... Ooh, God. Oh. Magnificent. 85 cents to 140. Yep. Beautiful. Paper trade was magnificent. And I think your call would have nailed it. I'm going to give you another A+. I'm not going to take the credit on this. It goes to you. I would give Randy the credit, but he's never here anymore. He used to be my best friend in here. Look at that. Boom, baby. Right back to Magnificent's number. I've never seen anything like it. It's like a magnet. Shane, come home. Shane. Shane, come home. Come back, Shane. The first book I ever read, and I read it twice, was Shane. And then I watched the movie and I said, they made a movie about this? I said, anybody ever seen it? That's what I thought. Shane, come home. Yes. I think if Magnificent was just watching what just happened, he would give me an A+ for hitting the right shoulder line this time. Shane, a classic. I get 2 A+. Good. Look at that. Right to it. By gosh, if we didn't have more than 6 minutes, I'd trade this stock. It's definitely a classic. I'm going to watch that tonight. From that day, after I read that book twice, I went from an F student to a B. And I think that was 3rd or 4th grade. 4th, 8th grade, 9th grade, 9th grade. Then I finally started learning. Look at that. Beautiful. That's a AAA day for Washboardjim. besides Magnificent and Randy and Mike and Ocean, Yoko, but I don't think it gets any better than this. Oh gosh, Jim. You could have made 300% on that trade. $0.10 all the way to 30 to 40. Getting out of it though would have been a fun job. Well, back to the old inverse, head and shoulders. Left shoulder, head. Right shoulder. In. Oh, never mind. Wrong one. A 1 and a 2 and a 1, 2, 3. Left shoulder, head. Right shoulder. Watch out. We got to retest here. We just retested. We can't retest anymore. Okay. Now I'm going to ask the room a personal question before I head out of here. And I need an honest answer because I can rig around it. Do I talk too much? Is the question. And I need your honest answer. Do I distract you with my wonderful singing and funny jokes? And maybe I could cut some of the slur words out. That would probably help. Like I left my damn cigarettes at the bar, you son of a bitch. One, two, three. There it is. Right into close. And make you laugh good. Nothing better than a Subway sandwich. Full of meatballs. Okay, now Ocean, I want you to listen real good next week. Paper trade only. Understand that the market is not, inflation went up. The market did not price that in. But they're going to shrug it off. All they're concerned about is that rate cut. They get one, they're going to be so happy this market's going to fly. The yak. I'm so sick and tired of listening to them. Back and forth. Ding, 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 ding. So, I think we're due for some more volatility. I think we'll see more volatility. and to be a little bit more patient on the pullbacks. The charts are coming out perfect. The charts are displaying perfect patterns right now. So this morning I came out and I said, look for the mega. And what we did, we hit megas. Expansion. The wider the spread, sometimes the bigger the bread. I got stuck in one bad trade and sold it for a loss, but the rest of the week was pretty good. Cost average down. Seemed to me like I'm getting that down a lot better, not costing in as much. Being more, due to Mike, I think I'm more of a, diligent with waiting for that second buy-in and that third. There's a couple of bad days. I'm getting a lot better. I'm staying in the trades longer. I'm scaling out. Seems like I've hit the bottoms pretty good, and I wanted to catch. I missed again this week. I threw away a lot of more money than I made. But I think it's important because other people ain't going to see. We all have different strategy. You can be in the now, and I really hate seeing people lose money yesterday after I've been saying that we've been at a real, and you've been hearing it every day. I've been saying, man, you can hear the way these people are talking. They're saying frothy. They're saying last week all they could say was irrational exuberance. They were saying it this week. That means everybody's thinking the same. They want to follow the trend together. So there's more bears in the market. At 6 to 10% pullback, and we've had such a huge run. It could fall 100% and not hurt nothing. I just see a lot of wishful thinking out there. And I got to be very careful and not hold a lot of stocks. The same stocks I call out every day, they all got cash. They're always in the news. And I like following Schwab, especially during earnings. Every day they talked about the earnings stocks. I thought that was really, really good. And they got onto politics. I had to shut them down. That one guy. If you call Elon Musk deplorable, you're talking to me, man. Okay, that's it. I gotta go downtown and get my business license. I'm late, 3 months. Get that and pick up my insurance things so I can send to my clients. I had a weird week this week. I paid some taxes. I got money back from my business. I went 20 years without collecting any income tax check. 25. I wish I'd have thought about it a lot sooner. Being more itemized. That's it. I think that's it. Don't drink and drive, or at least if you think you're too drunk to drive, don't do it. And if you're not into smoking cannabis and you're out doing it, don't drive. If you're not used to it. What else? Yeah, I'm gonna just keep showing these patterns, man. These key entries. Maybe you'll start, some of these people, guys, some of you will start catching on that are having a hard time. I just don't think you should be trading anymore until you got some kind of strategy down. I show mine every day. And I call it out. I say, get ready. If it don't squeeze within a minute, then it ain't working. I'm going to wait for the head and shoulders, like here today, on the downtrend, on SPX. I said, I ain't taking it. I don't trust this market. So let's go over the watch list real fast. Then I'm going to head out. Or I'm going to do another video on it. I'll probably do that. I'll do 2 of them. This has been red most of the week. Today's winners were in volume were Apple. This is a 5-day chart. Beautiful little pullback on this, see? This is what I'm talking about. Okay, you come in here and you watch Apple every day. You know it's cheap. So you come in here, write it open. Whoa. What the hell happened here? Coca-Cola. And you notice the big sell-off right at open. All the way from, $3 or $4 the last 20 minutes into open. Wow. I'm watching this every day. We just hit my support level, 171. Jim, we just had a big hammer off your support level of 171.06. How'd you get that support level? Well, got it from yesterday's last low a couple days ago. That was going to be my double bottom if we pulled back. 171.06. Damn, Jim, you nailed it. We pulled right back to it today. Right at open. And we bounced up off of it, created some kind of support. We pulled back and we're still above it, Jim. Looks good. We'll just sit here and watch it. Uh-oh. Uh-oh. Jim, we're nearing a double bottom. Let's get the snake drawn. So now we got the snake drawn. We broke out. I got a new knock on the door. We broke out, Jim. Okay, let's keep a good eye on it. Let's wait for the pullback and hit the trend line. Boom. Uh-oh. We just took our first entry. Hey, Jim, you got an emergency. You got to hurry. They say there's some hubcaps in the middle of the road and you got to go pick them up. I don't know what to do, man. It's not a real good day today. It's quad witching. I think I'm just going to go ahead and hold this. And take all my chances because I know we're at a low. I'm being in the now. And all of a sudden we have a 1, 2, 3. Boom. I got back just in time to sell it at 171. I had a double top exit idea and I took it. I made $55 a contract, Jim. Thank you very much for that triple bottom coming out of the snake. Whoa. Triple bottom, double bottom, caught my idea. Once we broke out, pulled back, boom. Or exit idea out of the 200 to the 200 and get out of it. Because that's our target area anyway. Snake, break out, pull back to the 200. Okay, well, that's it. Yabba dabba doo. We'll catch you later. That's funny.